Good evening, guys. Am I audible to you? Can you give me a quick confirmation over the YouTube chat box? Am I audible to you clearly and now visible as well? Awesome. Okay, so I hope everyone is doing really, really well today. And welcome you all to the AAA Grand Revision of December 2024 attempt. And this is the last attempt for this year, and we are supposed to make sure that we finish off the year in a very good way and actually secure a pass in the very first go. And if you're attempting this paper for the second time, then also I hope that this is the time that you actually pass this paper. So let us just wait for some more people to join. And yes, we'll be having the SBR Grand Revision tomorrow itself, same timing. And also, please share this link with any student that you know is preparing for AAA. Just make sure that they join in. And I want throughout the session that our energy should be very high, okay? Because we are supposed to do theory subject, and theories are boring. But then we are supposed to make them interesting with examples, with technical, application that we do in the case studies. So it's very important that we remain enthusiastic throughout the session. So just quickly share off the link everywhere where you are part of free WhatsApp group that you're part of Advanced Audit and Assurance or any study group that you have. So just quick yes from everyone that they are in the session and ready to begin. Come on, quick yes. Then I'll share my screen. Awesome. Okay. Just let me know once you can see the screen on your screen. There we go. So guys, today we are starting off with our AAA Grand Revision. So it's just few days which are left in our exam. So we are supposed to do it with full focus right now. So if you have any distractions, that just keep it aside. Don't scroll your uh, phone while watching this video. And if you want to ask me, ma'am, whether it is recorded, will it be available on YouTube? Yes, it will be available on YouTube after the session. I recommend just like let's begin. There was an interruption in between anyway. My live started on my will as well. Okay, so let's start and see what's happening in AAA. Now, guys, let's first discuss our format of the exam. So, AAA Grand Revision is what we are doing. And after the session, you will also find this PDF in the description box. Whatever I write in the session, okay, whatever I write in the session will be shared with you as a PDF in the description box. So, AAA Grand Revision, it is 20 December 2024. And first, we will discuss about the format of exam. For those who don't know it or who have not paid attention, who just quickly jumped into the syllabus and they were not sure of what is happening in the case studies, what is the exam format, what we are supposed to do in the on the day of the exam, this type of discussion is very much required for you, because when we get into the syllabus in detail, we tend to forget the simplest of the things and we tend to ignore the most important things, which are like basic things like what is asked in which question, which area of my syllabus is the most important, Okay, and how should I write my answers in the day of the exam? So those things I am going to discuss with you in the first part of your grand revision. So the format of the paper, guys, we all know that we have three questions being asked. We have 80 technical marks, right? And then we have 20 professional marks. So that makes 100 score in our AAA. And of course, we all aim for 100. We might not get it, but at least let's aim for 100 score. So 80 technical marks, 20 professional marks. In the technical marks, I'm supposed to answer questions related to the whole process of audit, which includes planning stage of the audit when I'm supposed to assess the risk, which includes acceptance procedures. Should I accept a certain client or not? Okay, and it also includes that what should be my ethics as an auditor when I start the process of audit. Then it also includes that how good quality audit is done. So quality management is also there. Then what we have is we further have the actual stage or working stage of the audit where we actually perform certain procedures. We do work and we get sufficient and appropriate audit evidence to just support the fact whether the financial statements are true and fair or not, because that's what you're supposed to do as an auditor, right? You're supposed to go to the client's premises, that you're supposed to check their financial statements and then finally conclude whether these people are actually not saying any lies in the financial statement. So you are being a detective who's finding all the mistakes in a financial statement, and for that you're getting into their full details, like what they've recorded. If they've recorded an asset, we actually go and check whether that asset exists. If they say, oh, we have a property there in this place of the country, we actually go to that place and check whether they have that property or not. We check their ownership papers. And then we even, when they are, let's suppose they are saying that we have an assumption that, the life of this property is this much. Then also we see them with a skeptical mind and we are like, okay, you have an assumption of life of asset, but is that right? Is that true? For that we need some written representation. Give us a written, you can say, your side of proof that yes, the life of the building is 6 years. And then you also do market research that if we have a similar building, what is the life of that building? So as an auditor, you are involved into a work of Sherlock Holmes, where you're actually being a detective and trying to figure out that the counterparty is not lying, right? So you are just finding lies. So that's what you do in the procedures part of your audit. And then after you complete the audit, you actually collect the evidence. So that's the completion stage of the audit, when you actually collect that, okay, if I have checked whether the property exists or not, how would I checked it? I must have visited the property. So if I would have visited the property, I should have clicked a picture there. So that is a photographic evidence that I have, which is to be reported or is to be included in my audit working papers to finally conclude that yes, this property actually exists. And if I've checked their ownership papers, then I should have a copy of ownership papers on my audit working file. That's what I do in the completion stage of audit. Then I also have the review and reporting stage. What is review and reporting stage actually? Where finally, once the work of an auditor is completed, they actually review the process. They also see that what is the effect on going concern, if this client is a going concern or not, have they recorded the going concern difficulties properly or not. And then we finally report our answers in the, or our conclusions in the audit report. So we will discuss in detail what goes into an audit report. What is the format of preparation of audit report? What are the different kind of paragraphs that we add into the audit report, and what are their placements, like in, what is the, you can say, the order in which you include those paragraphs. So that is what we are going to discuss today, and that completes the whole process of external audit. Now we are also asked in our AAA paper about certain other assignments. What are these other assignments? We have other assignments like due diligence, where maybe we want to buy a new company. And if we buy a new company, we need to see whether their financial statements are correct or not. So I don't know if you guys watch it or not. we have a very good series, which is Shark Tank, where we actually see whether the businesses, what are the startups, and what are the business ideas, and those entrepreneurs, they pitch their ideas, and then finally, when you give them investment, maybe someone is lying. You're supposed to check their financial statements. You're supposed to see whether the numbers that they're saying are right or not. So that is due diligence, when you actually see whether the counterparty is not lying and you want to buy that counterparty. Then we also have fraud investigation, forensic investigation. So as an auditor, sometimes there's a fraud which has happened, okay, and we are supposed to see whether that fraud actually, has some implications or not. Did the fraud actually take place? Who was the preparator of fraud? Who has done it? And like, what should be the loss that has happened to the client because of this fraud? And what are the control deficiencies? If someone has fraud, in their company, that their employee was able to commit a fraud. So that means there is some control deficiency. Maybe you do not have a CCTV camera in your office, which is why the client's employee got that leverage to commit fraud. Maybe you do not have enough, you can say, test of control. Maybe you have a CCTV camera, but your camera is not working, but then you didn't perform any test of control. If you have a camera in place, you're supposed to check now and then that whether that is working fine or not. What are the activities of my employees? So it's not just like that you'll install a camera and then you can just get rid of it. Of course not. You're supposed to keep an ongoing check on it. So that's what fraud, investigation as an auditor we are supposed to do. Then what do we have? We also have our cash flow forecast. So as an auditor, we might perform certain work on some cash flow forecasts. Okay. So a company always make budgets, projections. Where do they see themselves in future? Not just in aspect of profits, but also in aspect of cash. So maybe they have some contracts already being made with certain customers. So that is going to get realized. And at the end of the day, you're going to get some um, cash in hand. So you are forecasting it. So that is also something that we do as auditors in other assignments. So we are going to discuss all of these things today in a very quick manner, in very brief manner, because this is a grand revision and we are supposed to complete the whole set of our syllabus and just have a touch on few areas, especially the direct theory questions. Okay. Now, guys, what is the format of the exam? I told you 80 technical marks from these areas. Question number one is going to be a 50 marker question where you're going to get questions like audit risk. Okay. You might get a question in form of risk of material misstatement. You might find a question on the business risk. Okay. And plus, you can find a question on procedures, like there are some accounting standards that you should know before you make procedures. So in my course, whether it was crash course, whether it was the full course, we've completed the standards. Like, we first discussed the standards in the session and then I gave them the procedures related to that standard. So it's very important when you write procedures, you exactly know what kind of work are you doing, and then you should know why are you doing that work as an auditor, right? So procedures are there, then evidence question can be found. Then you can found certain direct theory question also for like 4 to 5 marks in your question number one for 50 marks. Then we have question number two. Now this question number two is basically for another 25 marks. Fine. And usually here you get a requirement which is about matters to consider. So they will give you some things which are going wrong as per the IFRSs. And finally, they give you a requirement that what are the matters that you should consider in this situation. So there are certain accounting standards which are being wrongly applied, and you're supposed to just comment that this is a misstatement, this is material misstatement or not. So you comment on their materiality, you comment on their treatment as per IFRSs, and then finally you comment upon that how does that impact your financial statements, plus how does that might impact your audit report if it is a proven misstatement, which the management is saying that we will not amend it. Right. So this is what you do in question number two. Again, in this, you might even be asked something related to ethics as well. So ethical implications and quality management issues can be there as well. So you're supposed to mention that why it is not a good quality audit or why it is a good quality audit. So question number 2 can have those quality management questions as well. Then question number 3, this one is quite easy one, because here we get the 25 marks again, but this one is related to reporting. Okay, mostly we get a question on critical appraisal of an audit report. So if the paper is easy, I would say you will get this question, because this is something which is predictable. Okay, that critically appraise the audit report. There will be some mistakes along the audit report. Maybe we have used pronouns a lot, where maybe we were unprofessional in what we did. We actually used words like I, we, they. We have named people who have done mistakes in the financial statements. So that is the critical appraisal of an audit report. You've included wrong headings, you've included wrong content. So that is reporting that you do in the question number 3. Then you might even get a question on other assignment. So one such question can be found on other assignment. Maybe they ask you some procedures from other assignments, or maybe they ask you some just not procedures. Then they might even ask you some direct question related to other assignment, or maybe some evidences that you might find in that other assignment. Or they can combine the other assignment with ethics. For example, the fraud question, like as a forensic investigator, how you should be way more ethical than an auditor, because in forensic investigator, if you know this, you're acting as someone who's finding that who's the perpetrator of fraud. So you're finding a kind of, you can say, a suspect. So there are certain suspects and you're trying to find that who is the person who's committed fraud. So if you are on that level, you will interview many people. You will call out many employees and you will interview them. You'll ask them personal questions, where you were on that day, what happened, how do you deal with these stuff in your company. Not just the personal questions in terms of a person, but personal questions in terms of a business, that maybe you will also get access to sensitive data of a business. So being a forensic investigator, you are supposed to be unbiased. Okay, way more unbiased. You can't leak out the information. Even if you find out that who has committed the fraud, you can't just go out in public and say that, this person has committed fraud. That would be bring disrepute to that person. And you are being a professional forensic investigator, so you can't act childish in that way. So you have to be way more professional than an auditor. So these things like confidentiality have way more implications in terms of forensic investigator rather than in the case of auditor. So this is what we do in question number 3. We can get reporting, other assignment, and again a mixture of, that procedure is like a garnishing which happens. So you might get a question again on procedures as well. Okay. So this is our format of the paper. Now, if I talk about the 20 professional marks that are available to you, what are you supposed to do with these 20 professional marks? See, it's all about how you actually write your answers. You should use professional words. Now, you can't start using words like, that, this, where you're trying to explain a concept in your own words. I know it seems really fancy that, when we are not aware of certain standard language, let's try to frame it in our own words. That's okay. That's commendable. That's good that you even tried. But I would say in certain questions, in certain ways, professional words are very important, because now you're an auditor. So in the audit requirement, they would say make a briefing note for your audit senior, for your engagement partner. Now, with an engagement partner, you can't talk in an unprofessional way. You can't keep an informal tone. You have to be to the point. Okay, so do not repeat your points. That's very important. Like sometimes we feel like let's give a background. In case study, they've given us something and we try to give them the background in our answer. Don't give too long backgrounds. You might give a little bit of the background, but not too long backgrounds, because just imagine a situation. The senior or the engagement partner has emailed you that information, and now you are explaining that information to him. No, he has emailed this to you. He's asking the implications. Now, don't go on and on explaining what has happened. Just tell what is the implication of it, which standard applies to it, what are the further actions that you should be taking. So be professional, do not repeat your points, okay? Use professional words, use keywords, and plus do not use short forms. If even if you use short form once, give them the full form in the brackets, and then you can use it. Like TCWG is something that you can use. IFRS is something that you can use, even though auditor cannot use it, but you can use in your paper once you give the full form of it. Okay, so that's important, and then your answer should have a logical flow. Okay, so it should not be like, let's suppose they say evaluate and prioritize the audit risk. So you don't prioritize it. You just write it in a random order, and that too is not prioritized. That's not good. Then they asked you about ethical issues and quality management issues. So you first explain quality management and then ethical. That's not a good flow. So you have to be to the point, move in the direction of the case study, have a logical flow in your answer, use professional words, and not repeat your points. Right? And then you should have a good evaluation skill. What is evaluation skill? When you look at you know, when you look at something from a 360-degree view, that is evaluation skill. So you need to have a 360-degree view. It's, for example, there are two answers, okay? One is in a case study they've written, let's suppose, let me just put this off. Okay, let's suppose in the case study that they've written that the audit junior has performed the work on derivatives. This is written in the question as a line, simple line. Now you're supposed to mention about the quality management issues. I will see a student writing that the work performed by the audit junior on derivatives is not good. So it's a bad quality audit. One liner. Now, what he is written, I understand what he wants to write. I understand that this is a bad quality audit, but this is not a professional thing that you've written. And this is not something that is evaluating the situation in hand. Are you looking at this situation from 360-degree view? Are you looking at this situation digging deep into its implications? Are you using professional words here? Are you showing your answer writing skills here? Answer is no. So how are you supposed to answer this question? Audit junior is performing work on derivatives. Why is this bad quality audit? So first you have to mention that derivatives is a very technical area of financial statements. You can give the reason because in IFRS 9, it has a complex accounting treatment where it is very difficult to even identify a derivative, let apart be its accounting treatment. And then derivative is something which is again overshadowed by hedging. We never know that a derivative was bought for the purpose of hedging. And the fair value of a derivative comes from a market, which is again a very technical thing to handle. So we are telling that why derivative is a difficult thing to handle. Then we come on the audit junior. Now this audit junior was the person who's going to perform the work on derivative. Now this person is not capable of doing work on derivative. Why? Does he not have sense? We'll say audit junior lacks KTE, knowledge, training, experience. It's a complex area already, and this person junior, he does not have work experience. He does not have the knowledge of derivatives. Maybe he has just joined. Come on, you guys have been new joinees in so many firms, maybe audit firms. You don't have the knowledge, okay? So then you look, I still get messages from my students, ma'am, I am working as an auditor, and then I watch your grand revision of SBR and I revise my standards. So that means when we do the work, we might not know the real outcome or real implication of a accounting standard. So this audit junior does not have that particular mindset, that knowledge, that experience, and so he is not capable of doing work on such a complex area. He should be given an easy work to handle, something that he knows, something that he's trained for. You can't give like, okay, let's suppose I start cooking today. Now, today only you can't ask me to cook something which is very difficult to cook. Okay, so I might make bread and butter. I might make some Maggie sort of a thing, and then maybe a tea sort of a thing. But you can't ask me to cook a full, meal, which is like in my language we call it like where we have a lot of meals and a thali is there. So I can't cook that. So that means an audit junior is not capable of doing the work on the derivative because he lacks judgment, because he lacks knowledge, training, and experience. And this amounts to, now also you can't conclude it's a bad quality audit. You will say, okay, how can I relate this situation to quality? I will move to ISQM 1. ISQM 1 says there are elements of quality management, and one of the elements of quality management says human resources. That means I should have, as an auditor in my team, I should have such people on my team who are capable of doing work according to their capability in all the given situations. So that means my human resource allocation as an auditor is not right. And because of this, there might be a mistake in derivative, there might be an error, misstatement in the derivative, but still this audit junior, because he is this, he can't find that mistake, which is why it increases the detection risk, or this increases the risk of material misstatement going unnoticed, which is why this is a bad quality audit. So that's how you answer, okay? So those of you who think that we got a 49, why did we get a 49? We wrote the answer right. This is the reason. Evaluation. You have to just dig inside the situation. You can't just do it like, okay, I'll just have an overview of it, or I'll just write it as an overview or write it in short. No. You have to write its implication. You have to have 360-degree view. And then in the case study, they've given that even this person, okay, was audit junior, his work was also not supervised. Come on, bash them more. Supervision, again, it's an element of quality management. You'll say, quality management, no supervision. We should have supervision at each stage of audit. Every work that is performed by an audit junior should be checked by audit senior, or then this should be checked by the manager, or whatever the hierarchy is. And then finally, the engagement partner should also check the work of all the audit team members. So no proper allocation of work here in this situation, no supervision, which is why this is a bad quality audit, right? And that means now there might be more increased, or there will be an increased heightened detection risk in this situation. Correct? So this is how we answer a question. This is how we answer a good question and get our full score in the exam. Otherwise, again, we always get that not so good marks. So evaluation skill is the most important skill, which will not, they play games with you in the AAA paper. They say we will deduct the marks of evaluation skill in professional marks, but they also deduct it from technical marks. So if you have written something like, in the where the evaluation skill is not applied, they will be fool you. They will not just deduct your professional marks, but they will also deduct your technical marks. So in AAA, it's very important that you know the technique of writing an answer. You're writing a procedure, know the technique. You're writing an audit risk, know the technique. You're writing a quality management answer, know the technique. If you're writing ethical answer, know the technique. It's all about the technique in AAA, okay? So if you do not have that technique, we only have few days left. You can still get it. Just look at your Super 20 questions, read their answers from the back of the kit, and try to get that technique. Today, I will discuss that technique, but I can't solve questions in the grand revision, which is why I request you that you can even check your Super 20 questions that I've already shared on my YouTube channel, the list of the questions. Just go through those questions, read their answers from the back of the exam kit or the SCCA study hub, so that you realize what is the technique of answering. Okay, now let's get started. So this is our whole concept or format of the paper where I've detailed you many things. Now we will discuss further about more things like our, what should be there in our direct theory questions. Let's get started. So to begin with, we will first discuss that as an auditor, what is the objective of the process of audit? So I will give you direct theory questions. We will discuss 30, approx 30 direct theory questions, and we will just understand the whole concept in this session. Question number one. What is the objective of audit? Come on, you tell me. What is the objective of audit, external audit? Why do you do audit? Because it is fun. Why do we do audit? Yeah, come on. Why do we do audit? Don't tell me it's fun, ma'am. That's why we do audit. Where is the link for Super 20 question list? Just go to my YouTube channel in the video section. You'll find, I think it's the second last video that was posted. Not a lot of videos this quarter, but yeah. Okay, what is the objective of audit? Fine. The objective of audit is to, okay, the objective of audit is to check whether the financial statements are true and fair or not, and to finally give an audit opinion on the truth and fairness of the financial statements, right? So what we are doing is we are giving an assurance here. So what we are doing is we are giving an assurance. What kind of assurance are we giving in this case? Is it a reasonable assurance or limited assurance? It is a reasonable assurance. We're giving a reasonable assurance to people. Who are the people? We're giving them to shareholders, okay, to the stakeholders at large, which includes the government, the tax authorities, which includes potential shareholders. So basically, why are we supposed to do audit? Audit happens because of agency theory. What is agency theory? Agency theory is when the directors are not trusted by shareholders. So who is actually the owner of a company? Owner of the company is a shareholder. Shareholder has put money or invested money, and the directors or the controllers. For example, again, let's take the example of Shark Tank. The sharks, they invest in a company and they become owners. Like they take equity in that company. But who is controlling that? The person, the CEO is controlling that company, or the directors are controlling that company. Now, the sharks who have invested in a business, they might not trust the directors or the CEOs, which is why they assign a person who's external to the company from their behalf. They assign that person who's known as external auditor, who goes to the entity and actually checks whether the statements prepared by the CEO, statement prepared by the directors are true and fair, or that is the objective of audit. So objective of audit is to give audit opinion whether the financial statements are true and fair or right. Okay. That reason arises because of agency theory. Then comes question number 2. As an auditor, what is the most important attribute? Like, if I talk about an auditor, what comes to your mind first? What is the attitude of an auditor? Yes, what is the attitude of an auditor? Come on. What is the attitude of an auditor? Any ideas? Very good. Professional skepticism. So the attitude of an auditor, that is very important in AAA as well. So what is professional skepticism? Professional skepticism is nothing but an attitude of questioning mind. What is questioning mind? That I'm supposed to question that what is happening. I'm not a fool that anyone can come and say that okay, this happened and then agree to it. I have to be having a questioning mind. I am always looking for errors and fraud. So that's an attitude of questioning mind. So in the process of audit, what we do is we always keep a check as an auditor that whether the evidences that we've collected are sufficient and appropriate or not. Right? So we always keep the way I'm writing, you're not supposed to write this way. I'm just giving you a brief of it. So attitude of having a questioning mind is professional skepticism. Where do you use professional skepticism in the process of audit? When you've collected certain evidence, you always see whether they're sufficient and appropriate or not. What is sufficient? Good in quantity. What is appropriate? Good in quality. So whatever evidence, for example, if I'm checking whether something is correctly calculated or not. So I should collect such an evidence which is sufficient to prove the accuracy, mathematical accuracy, and which is also good quality to prove the mathematical accuracy. So I'm supposed to collect such evidence which gives me sufficient and appropriate, you can say, proof, right? So that's professional skepticism. And sometimes, okay, sometimes one evidence contradicts another evidence. So one evidence that I collected shows that the profit should have increased. Another evidence shows that profit should have decreased. So these are contradictory evidences. Or one evidence shows that the fair value should have been 1 million. Another evidence shows that the fair value should have been 2 million. So that's a contradictory situation. So whenever one evidence contradicts another evidence, or we can say contradictory evidences are there, we are supposed to be skeptical as auditors. Now, what we will do is we will get into the facts that why is there a contradiction. We'll go and inquire from the management. We will go and dive into that situation rather than be sitting there like, okay, they contradict. Who cares? No, you have to go there in the field and realize that why this contradiction exists. How can you make sure that you find such a conclusive evidence that there is no contradiction, right? So that's our professional skepticism. What else is there? We are supposed to be skeptical to find possible fraud in a situation. Okay, so you can't be like, for example, I'll give you one very small incident. What happened? We were just there on a jewelry shop, and my family was buying some piece of jewelry. It was festival season in India, a few months, or I would say 1 month. And the salesperson there, she was very keen on asking that where do you stay, where do you put up, and where you are going to go after this, and which vehicle you are supposed to use after this. Are you going by yourself and all that stuff? And you know, jewelries are expensive. So in that situation, my mom went with the flow, keep on, answering whatever the salesperson was asking. But actually, you're supposed to be skeptical there because there might be a possibility of a fraud in that situation. Maybe she's trying to take out things, and you might encounter a theft after you move out of that store. So you have to make sure that you're skeptical to whatever frauds might occur because of a situation which is arising. So that's being skeptical, okay? Being prepared for the worst and being alert to the situations around you. So as an auditor also, you're supposed to be skeptical that, okay, this has happened, this might, for example, there's a control deficiency. So you just don't aimlessly see, okay, this is a control deficiency, let me just report it to TCWG. No, you actually see that because of this control deficiency, there might be possible fraud. There might be certain employee who has overridden this control. So that's a possible fraud that might be there. So you are being skeptical in that situation, right? Then you are also supposed to be skeptical to identify any error. So in the identification of material misstatement, which happens either due to error or fraud, you're supposed to be skeptical. Okay, you're supposed to find the mistakes. You're supposed to see if the accounting treatments are correct or not, whether what the chairman is saying is right or not, whether what the management is assuming is right or not. Maybe their intention is something else. So maybe they are, you know, the management usually has an intention to overstate profits. I mean, nobody wants to understate their profits because they want to get investments, right? So if they want to overstate their profits, they would actually, make some decisions or assumptions. For example, you might lower your depreciation because you want to overstate your profit. So you have to be skeptical as an auditor that why they are doing this, why they are making such assumptions. That is basically management bias, right? So you are being skeptical to management bias in that situation. Then you are using this particular attitude as a weapon. So as an auditor, you are using professional skepticism as your weapon. that whatever the situation is, it might be something which goes over my head. I don't understand what is happening, but still, with skepticism, you can solve majority of your problems. Yes, with skepticism, you can solve many problems as an auditor and find a lot of conclusions as an auditor if you're just being skeptical, right? So that is what professional skepticism actually is. Now, being an auditor, you are supposed to follow, okay? Yeah, you are acting as a CID in this case. That's right. So, being an auditor, you're supposed to follow the ethical, you know, code of conduct. What is the ethical code of conduct? Let's discuss that. And then we will discuss the quality management. Let's discuss ethics first. Okay. So let's go on with the ethics. Right. So what are the principles of ethics that an auditor is supposed to follow? What are principles of ethics which an auditor should follow in the audit process? Yes. What are the principles of ethics? You have PIOP. What is PIOP? PIOP, where P stands for professional behavior. So first of all, the auditor must have professional behavior. What is professional behavior? Where you are not bringing okay, we are not bringing disrepute to the profession. So if an auditor is an Indian CA or if the auditor is an ACCA, he should not do such works which brings disrepute to his profession. So he should not be indulged in certain activities which brings disrepute to ACCA. So he should not be involved in money laundering, that's against professional behavior, and that's a criminal activity as well. Then he should not be involved in frauding the clients, or he should not be involved in just working for the money. Okay, so as an auditor, you're not working for the money, you're actually working for a lot of things other than money. You're working for the interest of the shareholders. You're being a professional. Now, if you're a lawyer, you can't fight just to get money. That means you will support a criminal also. That's the ethics of a lawyer also. That you can't support a criminal. But then that's not true. In reality, if you talk about ground reality, that's not true. Lawyers are working. The criminals are also finding lawyers for themselves. So that means what is professional behavior? That we should not do anything which is morally, ethically incorrect, being in the profession that we are, and that brings disrepute to our profession. For example, if you talk about audit in general, let's suppose you are an ACCA affiliate, but you call yourself ACCA member. That is against professional behavior because you're bringing disrepute to your profession. That means you do not have enough knowledge, training, and experience, but then you are falling for it. That's wrong. You're doing incorrect marketing in that situation. And then if we call about marketing, like if you are, for example, demeaning someone else in the competition. So you can't say that, others are bad and we are only good. Now that brings disrepute to others. You're bringing disrepute to other person by saying so. So, for example, I've seen certain advertisements. For example, toothpaste, Colgate, and another toothpaste is there. I don't remember the name, but yeah. So they try to make the comparison, but then they don't name it. But the tube which they make the comparison, that clearly means that they are trying to, compare it with that same brand. So what they're doing is they're bringing disrepute to a certain brand. You just tell about what is good in you. Don't try to uplift yourself. Don't try to bring other stuff. Don't do lowballing. What is lowballing? Don't try to actually lower your prices on the sake of quality. So that is like being professionally in a good behavior. Right. Then what do we have as what is I? I stands for integrity. So I stands for integrity. What is integrity? Being straightforward and honest. So I should be straightforward and honest as an auditor. I should not lie. I should not be demeaning in any situation. I should not falsify facts. I should not be biased. I should be objective at all times. So being straightforward, honest, not making stories, not trying to please anyone, but just being straightforward, truthful, honest in all the situations, not accepting bribes, not accepting gifts which affect my you can say objectivity, and then not becoming a part of a false statement, right? Not becoming a part of not just false statement, but a false act, maybe a fraud. So if the company is involved in child labor, I'm supposed to report that child labor, not actually become part of it, just because that person has offered me some money to keep it as a secret. So that's against integrity, right? Then what else do we have is C. What is C? C stands for confidentiality. What is confidentiality now? Confidentiality is your duty as an auditor, that you have to confide any information that you've gained as your business relationship. So any information that you attain as a part of your business relationship with your client or anyone else, you are supposed to not leak that information out without any prior permission unless it is required by law or it is in the public interest. So what is confidentiality? Confidentiality means confide the information received as a or received in a process of business relationship, not leaking out the information or sensitive information without prior permission, right? Unless required by law or in public interest. So unless it is required by law or it is in the public interest, you should not do any such. Now, when it is required by law, for example, you are asked to come and attend a court proceeding and they ask you about someone who was your business client or who is your business client, and they ask you some information, then you're supposed to say the truth. You can't say that I will confide because, we have a confidentiality agreement. No. Then public interest. As I said, for example, they are doing child labor. It is in public interest to go and tell the authorities that this person is involved in child labor. Let's suppose they are doing something which is unethical, something which is not just unethical but criminal also. So you can go and tell in public interest. For example, let's suppose your client is making toys for children, and in those toys they're using a harmful substance which will actually lead to dire circumstances with the children who are using those toys. So, as in a public interest, you're supposed to breach your duty of confidentiality and be open about it. That is confidentiality. Now, in AAA, you will find that there is a proper ethical issue of conflict of interest. Okay. So, this conflict of interest is when we actually have, we are the auditors and we have two competitors as our client. Let's suppose we have two competitors, just talk about two, give me any two names. Okay, Pepsi and Coca-Cola. So, these are two competitors. Let's suppose both of them, they are my clients and I'm the auditor. Now, I am not supposed to leak out the information of one person to the other person, because if I do so, let's suppose I have the access to their recipes, I have the access of their supply chain, how they're cutting their cost. I'm not supposed to leak out this information, because if I do, then the other party will get competitive advantage and they will make more profits. They will, the person whose information was leaked, that person will suffer huge losses. So I am not supposed to do this. That's a situation of conflict of interest where I have two competitors as my client. So I'm supposed to sign a confidentiality agreement with both of them. So I will tell Coca-Cola also that I have Pepsi as my client. I will tell Pepsi also that I have Coca-Cola as my client. I will sign confidentiality agreement with both of them. And then finally, I will go ahead with the process of audit and I will keep Chinese ward. That means I'll keep separate teams. On Coca-Cola, there will be a separate team of auditors who will work. On Pepsi, there will be a separate team of auditors who will work. And those auditors should not be known to each other. That is what I would make sure as an audit firm. So that is why confidentiality is very important. And okay, then we have another thing which is objectivity. What is objectivity? Objectivity is being fair. Okay, when you're being fair, that means you're not biased. Actually, you do not just favor one party. So when you face certain threats in AAA, for example, when you have self-interest threat, that first attacks your objectivity. Because the moment someone favors you, you are like, oh, this person will never be bad. Let's help that person. Let's not be harsh on that person. Be the people pleaser that most of us are. So that's the objectivity which gets hampered there. And even when you not just about self-interest, sometimes when we have familiarity threat, if we know someone who's our friend and he's a client also, then again we hamper our objectivity. We become biased. We are too accepting of his mistakes, whatever he's done. We're too accepting of that situation. That is where you are not being, fair. You are accepting their mistakes, so that's not right. Then lastly, what we have is professional competence and due care. Professional competence and due care. Now, what is this professional competence and due care? This is nothing but application of knowledge, training, and experience. And you are having that KTE, knowledge, training, and experience, where you basically always apply your skills. Being an auditor, you can't say that I am working on audit of information technology. I'm working on the audit of IT, and I do not have IT knowledge. That means you're not competent. Then why are you doing that work? Why have you taken that assignment in hand if you're not sure of how to do that? Then what is due care? Due care is that if there were certain updations in something, I'm supposed to take that care. I should be updated at all times, and I should have that due care that I do not, use incorrect knowledge at the time of audit. That's when you have due care, right? So when I'm teaching, I should have a due care that I do not teach something which is wrong or something which is incorrect, right? So that's being professionally competent and have the due care. So that is PIOP: professional behavior, integrity, confidentiality, conflict of interest. I've explained the situation to you. I explained objectivity. I've explained you professional competence and due care. Now, there are certain important, you can say, situations where there are threats to these ethics. So how do you answer that question, and what are the types of threats do we have? Let's discuss that. So how to answer, next question is, question number 4 is, how to answer the ethical threats scenario in exam. How to answer that? First of all, we are supposed to know that which threat is being faced. So identify the threat faced. So you should always identify the correct threat. I will discuss what are the threats there, but you are supposed to first identify the threat correctly. Then I'm supposed to mention why is it a threat. Like in a situation, if we are accepting gifts from our client, why do you think it is a threat? So why is it a threat? Sorry. So why is it a threat? That is what I'm supposed to mention. And then I'm supposed to give the significance of threat. That means I'm supposed to tell, for example, if that threat was faced by an audit junior, that is okay. It is still manageable. But the same threat being faced by some audit manager or senior auditor or audit engagement partner, we are supposed to be saying that this is a very serious threat because the person who's leading the process of audit is facing this threat, right? So we are supposed to say that this is a highly significant threat in this situation. So we are supposed to see the significance. The significance can be seen that what was the amount which was given to us as gifts and hospitality. So what was the size of this? Who is facing this threat? Like the person, what is the position of that person? Whether the company is listed or not, whether the company is listed or unlisted. These are the things that we are supposed to see in case of our ethical threats, right? Then we are supposed to also give them safeguards. What is safeguard? Safeguard is when we tell about the, that what should we do to decrease our threat. So what should we do? For example, if they say gifts and hospitality, we will say don't accept the gift. If they say that there's a confidentiality problem, then separate teams, confidentiality agreement. Usually, the famous safeguards are that you do a quality control review, plus you keep separate teams for your process of audit. That's what we do. So QCR plus separate team. Okay. What is CPD? CPD is continued professional development. So this is how you answer an ethical issue in your exam. So many students ask me that, ma'am, if in the paper the question is for 7 marks, how many points we should write? See, in a point, for writing these four things, you're getting approximately 3 marks. So if this is giving me 3 marks, of course, and the question is worth 7 marks, I think I would say 2 to 3 points will do if you're answering it in this much detail, right? Let's go on. Question number 5. What are the ethical threats that we have? I've given you the strategy, but what are the threats that you face? What are the threats or ethical threats? Oh, so the first ethical threat that we have is self-interest, very famous threat. Self-interest threat. What is self-interest? When you ever have financial interest in a company. For example, you have shares in the company of your client. So your client's profit will impact the share price of your client, isn't it? So if the client will make more profits, if the client's revenue will increase, if client will do better, even your shares will do better. So you have a direct financial interest vested here. Better my client does, better will the shares of the client perform, and I will make more gains. So that's a financial interest that you have. So self-interest is financial interest is vested in that situation, right? Second is self-review threat. Self-review. What is this self-review threat? Self-review is basically checking your own work. So if I ask you to check your own paper, checking your own work, isn't it? So if I ask you to check your own paper, that is self-review threat, and you will be too accepting of your mistakes. You will not find out your own mistakes. Because imagine, you've written something, you've written it because you think that is right. So you will be very adamant to understand that this is not right. Unless someone circles it and writes it for you, this is wrong, this is not how you write it, this is how you write it. So if you're doing your own thing, like you're checking your own work, for example, you have prepared the financial statements and then you are also auditing the financial statement. That's not allowed. So self-review is that very important threat. Then familiarity threat. What is the familiarity threat? It's a direct threat to your objectivity when you have some personal or business relationship with someone. So there's a personal close relationship with your client, personal close relationship that you might have with your client or with someone in your client's management. So that's a long association, which is why you might favor someone. You might favor someone unduly, like your friend is the CEO of your client. So now that you are friends with them, so you are very like hesitant to say that, you've done this in a wrong way, please amend it, or you know, I will just modify the audit opinion. So you can't threaten them or you can't keep that authority of an auditor if you know that the counterparty is your friend. So that decreases your say in the process of audit and that impacts your objectivity. Then we have intimidation threat. What is this intimidation threat? Where you actually have a pressure or you perceive a pressure. So either there's an actual pressure that you are facing, intimidation, or there is a perceived pressure that, let's suppose you were working under someone a year ago and someone was your boss, and now that someone is your client, audit client, suddenly everything is reversed. You were someone who was intimidated from your boss, and you always were like, okay, sir, yes, sir. And now suddenly you're in a position where you're supposed to question your ex boss. So that becomes an intimidating situation because you're so used to just listen to the, anger and maybe listen to what he says or guides you. So in reality, if the situation arises, maybe you would love to do that, but okay, that's a perceived pressure for certain people who are not maybe so strong. So they might perceive this pressure that, oh, this person was my boss months ago, and now I am supposed to act as their some supervisor. So that's becoming very difficult. Then they sometimes in the case study says that please complete the audit in this much time, 4 months time, 2 months time, 3 months time. Pressure. So every time your mom says complete this by this time, you're like, no, mom, don't give me pressure. I'll do it as per my schedule. I'll study as per my schedule. So my mom always does this. Like if I just tell her that, I'm supposed to do this work by this time, she'll always be like, have you done it? Done, completed it. So that is something which builds pressure. So yes, in the process of audit, you can't work under pressure, unlike other processes of your life, other walks of your life. But in audit, you're supposed to work as per your, you can say, it's a very, audit is a very, you can say, a process where you're supposed to do a lot of things and answer a lot of questions and get a lot of evidences. You are answerable to lots of people there who are looking for your audit report. So you can't work under pressure. You can't be intimidated. So actual or perceived pressure, right? So that's what we do. Yeah. So Shravya says, what if we get to audit the financial statements of TGP? Yeah, so you might get intimidated, right? You'd be like, oh, ma'am was my tutor once, and now I'm acting as an auditor, so I should work, say things, certain things. If you take that pressure, okay. So not you know, I'm not intimidating you into this anyway. So intimidation threat, you are supposed to just move that person from the audit team who's intimidated. So intimidated means now that person is suffering, just take that person out of your audit team and put another person in. So intimidated person are not supposed to work in the process of. Then management threat. Now this management threat is very important, and this is something which cannot be reduced to a lower level without or with any safeguards. So management threat is something which is, as an auditor, you get into shoes of management. For example, your client is a very small company, and in their audit, your client is a very small company, and in their audit, you actually are giving them advices on business. You're telling them like how to do business. So let's suppose they just have a shop, and now you're an auditor of that shop. And those people are, you just tell them that there is something which is known as globalization. There's something which is known as, you can do your get orders on your mobile as well. You can get customers if you get listed on softwares like Zomato and Swiggy or Blinkit, whatever it is. And then they're like, wow, this person is so knowledgeable, he's going to give us business, he's going to tell us what is to be done. So that shopkeeper is now dependent on you. So you are getting into the shoes of the management. Are you understanding? That company was unlisted, it was a small scale business, and now you being a professional, you're bringing all that knowledge with you, and you're like this, and then they're like, yes, you tell us what in terms of, rather than just giving like improvement ideas or suggestions, not just you're giving suggestions as an auditor, but you are actually uh, taking the lead. You're becoming a leader for that business. So in that way, that is a management set. And if I give you another example of it, let's suppose you actually have let's suppose a situation where you, okay, they ask you to make controls. You say your controls are deficient as an auditor, and the entity says, the client says, you make the controls for us then. You tell us what to do. You devise the controls, and you actually sit down and devise the controls for them. That too on financial statements. That is management threat. You're not just creating a self-review threat, but you're also getting into the shoes of the management, because this is management's duty to perform or make financial statements, to make controls, to do test of controls. The primary responsibility is of the management and not you. And if you take that primary responsibility, you're getting into the shoes of the management. And if you get into the shoes of the management, there is no way out that you can reduce this threat. Then you are becoming the owner. It's like not just financial interest, there is a emotional connect now, that I was leading this business. So I have a connection with this business now. It's a small scale business. I'm supposed to just audit them, be their supervisor. It's just like I become your examiner. So you were taking classes from me. I was trying to help you with your improvement. And then I become the examiner and I see your paper. I might become the examiner, but then I should be checking it anonymously. I should not tell you, and ACCA would not tell me whose paper is this. But then I'm not supposed to, if I was getting to know whose paper is this, it would have been so difficult for me that this person was in my class. So I'm connected. This person is someone whom I have taught. So it's a management, right? So you're getting into the shoes of the management. You're not supposed to deal with such threats, and you're supposed to totally say that this is not. So whenever there's a management threat, I should just resign from the board. Then advocacy threat is also there. For example, in the question they say, please take us or just be with us in the negotiation with the bank. We want to take a loan and they want a financial guarantee. So can you just accompany us uh, to the bank? You will say this is advocacy threat. Why? Because you are promoting the interest of client, right? So now if you go to that bank meeting where you want to negotiate for a loan, that might not just impact the fact that you're promoting, but that will also create a legal obligation on the auditor, because the bank might assume that you are someone who's the guarantor of the solvency of your client. So that's advocacy. Now, if I talk about certain important scenarios which are there, important scenarios which are there in your AAA exam, which you might encounter. I've given the notes to you, those scenarios, every scenario is detailed in those notes, but these are just like few scenarios that I want to talk about. First of all, gifts. Let's suppose there's a gift being given to the, auditor by the client. So I need to see what is the nature of that gift, what is the value of that gift, and what is the intent of that gift. So I need to check the nature, value, and intent. See, if it is a trivial gift, what is a trivial gift? Something which is of very low value, something which is of very small value. I would say, okay, I can accept a trivial gift. Let's suppose they're giving me a pen in gift. So I'm okay, like, okay, they're giving me some notepad, a copy, a diary as a gift. Fine. But if this gift is very, you can say, this gift is very high in value, we will say that we are supposed to decline it, politely decline it. So what's your outcome on this? This is basically giving rise to self-interest threat. Because of self-interest threat, you might actually breach your duty of being having straightforwardness. That means integrity and objectivity. Because if you're accepting gifts, you will become biased towards that person. You will do work what they want you to do. So that's how you relate. You see a scenario, you first find what is the threat there, then you also see that which principle of ethics is getting compromised in this situation. So with gifts, self-interest threat arises, which compromises integrity and objective. So I will politely decline unless it is trivial, because this gives rise to self-interest threat. Okay. Next, what do we have? If we are being compensated as an auditor, we are being compensated on basis of state of non-audit services. So I just narrate an incident with you again. Most of you might have seen this if you live in India, that when you visit a salon or something, the person who's, maybe doing your hair or something, that person keeps on telling you this offer is going on, do this, do that, get a card, and get manicure done, pedicure done, get this done, that done, blah, blah. So they keep on selling their services. So what is that? They're getting commissions. More they get, that salesperson, if they get more people into the services, they will get a commission. So if you apply this concept in the process of audit, as an auditor, if you indulge with your client and you are able to market your other non-audit services. Let's suppose you're providing taxation services. Let's suppose you're providing something related to internal audit, something related to valuation services. So if you get your client get those services from you, and your audit firm gives you commission on that, and your audit firm gives you your fees on that. So that means there is a self-interest threat. This is a self-interest threat, where basically we are being compensated on basis of sale of non-audit services. You can even think from a different perspective that not just sale of non-audit services. Let's suppose the client says that, if you get me this much profit with your valuation services, or if you get me this much profit from your internal audit services, that is how I will pay you for your external. That's how I will pay you for your external audit fee. Even that is self-interest threat. So the person who's facing this threat must be removed from the audit team. And if the client is giving such a threat to you, we should also lead the process of audit, or we should get a QCR done. So that's what we do when we face such a threat. Then we have contingent fees. What is contingent fees? Just like the above point, if your fee is dependent on certain things, if we make this much profit, then you'll get this much fee. If our revenue increases, we will increase your audit fees. So it's like they're saying that let us overstate the revenue, don't say anything, keep quiet, because then you will get more fees as not. So this is strictly prohibited. This is not allowed, because this again gives rise to self-interest threat. So this is against our integrity and objectivity. So we are supposed to not get into such, you can say, arrangements. Then what we have is fee dependence. If you are dependent on a client for your fees, that means, let's suppose, for 2 consecutive years. What is the rule? If for 2 consecutive years, the fee from one client, if the fees from one client is 15% or more of total revenue of the audit firm, of total revenue of audit firm, then you should say that this is self-interest threat, and this is also intimidation threat, because you'll always be intimidated to lose your important client, because your fee from that client is very material. You don't want to lose that client, and you will always be too accepting of their work, and which is why you should always reduce your dependence, reduce the dependence. That means if for 2 consecutive years, if the fee dependence is 15% or more of total revenue, then simply stop providing services to them. Reduce the services that you provide to them. Reduce the revenue that you get from them. That's how you can reduce your fee dependence and decrease your self-interest and intimidation threat. Right? Then what are the safeguards for all these that I've given you? You can talk to TCWG. You can reduce the fee dependence. You can do the QCR. You can stop providing the non-audit services that you are providing. Then we have overdue fees. Let's suppose the client has not yet paid us for the last year. So there is an overdue fee. So what we can do in that situation? So in overdue fees, this is considered as a loan to the client, which again gives rise to self-interest threat plus intimidation threat, because you're intimidated, since if I do not bend to the needs of this client, they will not clear their dues, right? And why does it give rise to self-interest threat? It gives rise to self-interest as the recovery of fees is the financial interest of the auditor, and he would want to maximize the revenue. So that means you want to maximize the revenue because then only you will get the recovery. So the significance of the threat will increase or decrease on the basis of if client is listed or not. If client is listed or not. So if it is a listed client, this threat is more significant. Okay. So you are supposed to first, what do you do for the safeguard? What is the safeguard in this situation? The safeguard is before starting new work, the repayment should be received or payment plan should be made. So it's like before you start the new work, you should always make a payment plan. Like let's suppose the payment from the client is pending for the last year, which was 2023, and I will not start the audit of 2024 until and unless they give me the proper guarantee that this is the date that they're going to repay, and I should at least get the some payment, and I should get recover some payment and make a plan for how they are going to give me the other payments in future. Because overdue fees will increase my self-interest rate, right? Then becomes your next point comes non-assurance services. Non-assurance services. So if I talk about listed clients, in listed clients, some non-assurance services are totally prohibited. What are these prohibited services? Anything which is related to financial statement. For example, preparation of financial statement. For example, valuation services which are related to financial statement. Maybe you're valuing some debt or you're valuing some bond which is reported in financial statement. So you're not supposed to do that as an auditor of a listed client. If you are doing some work on IT systems which are related to financial statement, you should not do any work on internal control which is reported or which is related to financial statement. You should totally be prohibited on that. You can only provide some services which are advisory services. So you can advise someone, you can file tax returns for that person if that is an administrative work to do. Again, you can't do tax computation, but you can do the advisory part. Like you can give them that admin services where you just file the taxation returns. You don't calculate or compute the tax, you simply file the returns. And you can do this with safeguards. That means you keep separate teams for it. And that's it. So these are the services which are allowed for listed and not allowed for listed. For unlisted client, if I say for unlisted clients, you can provide any kind of services that you want, but you should have safeguards. And those safeguards are generally separate team that you should have, plus a QCR being done, quality control being done. That's it. So these are the scenarios of ethics which we have just discussed. We've discussed the PIOP, we've discussed the threats being faced by the auditor and some important scenarios I have revised with. There might be more scenarios, there are more scenarios, but in this session, we've revised the most important. I hope we all are clear till here. Yes or no? Are we all clear till here? Calculation of tax is not allowed. Yes, all clear? Okay. Now we'll just take a break of 5 to 7 minutes and we will just get back with our another theory questions after 5 to 7 minutes. Okay, just have a glass of water, come back with a fresh mind, and we will continue with money laundering. We'll continue with direct theory questions like acceptance procedures, fraud. We'll discuss laws and regulations, NOCLAR, and then we'll take another break, and then we'll discuss about the evidences, procedures, audit risk, and okay. I hope I'm audible to all of you, and I hope everyone is back from the break. Can I get a quick confirmation on the chat box? And then we will continue. Mic check. Yes. Okay, great. Let us continue. So now we will do some direct theory questions. Okay. So let's discuss about our money laundering concept. What exactly money laundering is. So this is question number 6. What is money laundering? What is money laundering? See, what is money laundering? It's the process of concealing the true origin of illegal funds. Okay. So illicit funds is what you want to hide as a preparator of, or you can say money laundering is a process where you convert the illegal money into legal money, right? So what is money laundering? Process of concealing the true origin, the true origin of illicit funds by placing it into the legal environment and layering it with a lot of movement, like you move that money a lot. So it's not that you keep it on a table and then move it, you move it across borders, you move it across bank accounts. So with a lot of movement, and so that finally its true origin is untraceable. So basically, we are converting the illegal money into legal money. So what are the stages of money laundering? First stage of money laundering is placement, where you actually place the illegal funds with the till receipts. So for example, if you have received something from an illegal source, let's suppose it's not let's suppose it is related to human trafficking, and you got that money, and now you're also having a business which has cash involved in that. So you just mix that illegal money with the legal money. You place it with the till receipts. So when you mix illegal funds with till receipt, till receipts are receipts from your business, right? First time when you mix it. Then you have layering. What is layering? Layering is movement. You move the money so much across borders and various bank accounts or various banks. Then finally you do integration. What is integration? Third is integration. So integration is finally bring the illegal money back to the economy by, for example, you buy luxury goods, car, property, etc. So that's how you actually integrate. So first you have illegal fund, you mix it with your business money, and then you finally, with the whole of that business income, you try to buy some kind of a safe. And that means now you have invested that black money, and finally you say that okay, now the money laundering process is complete. So in the case study, how will you figure out that this is the case of money laundering? There will be certain indicators. What are these indicators? If the given client in that case study is cash intensive business. So if that business is cash intensive, I would say that this is an indicator of money laundering. Then they have unusual big or huge transactions. So if they have unusual big transactions across borders, or they usually don't do that, but this year they made this big transaction, so that is something which is an indicator of money laundering. Then there are small transfers. You keep on making transfers to various bank accounts, right? So under no certain, I would say there's no reason for that transfer, but still you're making those transfers. Then you have an overseas bank account. Now that overseas bank account might actually be a tax haven country. What are these tax haven countries where there's no tax implication? For example, Cayman Islands. Okay. For example, you have your Thailand, Singapore, right? All these are tax haven countries. Then we have Hong Kong. So here you can save the tax, you can make your bank account without any much implications, and you can transfer your money to these accounts, and you can save the tax in the country which you're living in. So even if you save tax, that money becomes illegal money. That's a money from tax evasion, right? So that's also money laundering. Now, what are the ways which ACCA has suggested against money laundering? Like, how can an auditor assure that there is no money laundering happening in the company? You must always appoint an MLR. In any business, if an ACCA is running this or someone else is running this, if you want to take guidance from ACCA, they say always appoint an MLR. Now, who's this MLR? He's a senior person. First of all, you should know he's a senior person. And what he does is he prepares a report. What does he prepares? He prepares a report on who is the suspect of money laundering, what is the nature of the money laundering, what was the amount, okay, the timing of money laundering, etc. So basically, what happens is if in a company anyone thinks that this person is involved in money laundering, so now you are supposed to go and report this to the money laundering officer. Because if you go and tell the person only, for example, if you are involved in money laundering and I am your colleague and I am, doubtful about you that you are involved in money. So now I can't go and ask you that are you involved in money laundering? You'll of course say no, and you will try to hide all the evidences. That is known as tipping off. So if I tell the suspect only, I am tipping off, and that is a crime in itself. So money laundering is not a civil thing; it's a criminal offense. And if you tip off, if you tell a money launderer that we doubt that you are a money launderer, that is also a crime. So I am supposed to report this to a person who is, objective, who's not involved in money laundering, and who's the person who's supposed to be a senior level person. So that person is MNRO. I will go and report it to him. Then he will further prepare a report on the basis of the suspect, the suspicion that he has received. He will prepare a report that who is the suspect, what is the nature of the money laundering, what is the amount, time, etc. And he will submit it to the enforcement agency, right? So he submits this report to the enforcement agency. Now, after this, what happens? Second point, ACCA says always do KYC. Whenever you get into a new business relationship, always do KYC. As an auditor, always perform acceptance procedures. So in your acceptance procedures, you are supposed to see that who is the owner of your client, whether that person is politically exposed person or not, because if he is politically exposed, there are more risks attached that that person will be involved in money laundering because of obvious factors. Then we should also see what is the risk profile of the company. If they have such previous instances where this company had been suspected or alleged of certain, money laundering activities, we should not accept such a client. So we should see what their past has been. We should check their reputation in the market, and then we should only accept them. And we should see their integrity. We should judge their integrity. Maybe we can talk to the previous auditor and see whether they were illegal or not. We can check their integrity from certain people who be their stakeholders. So that's how you do it. That's KYC. And then third is enhanced record keeping. So basically, you just enhance your record keeping. You should keep your records from the audit for more than 5 years, because if in case you are being called in any investigation or any court proceeding, you should have some evidence to present, right? That's one thing that ECC suggests. Then communication and training. Within your firm, you should always make sure that every person from the grassroots level till the top level knows that what money laundering is. And they know that how to report this money laundering, and they know that you're not supposed to tip off the money laundering. So communication and training is very important so that we can avoid criminal offense. We can detect that criminal offense. Plus, we can also make sure that there is avoidance of tipping off. Right? Then policies and procedures should be in place. What are these policies and procedures? That basically involves like internal control so that you get to know about money laundering. If anyone is involved in money laundering or not, you should have certain policies and procedures for that. Plus, you keep on monitoring all the controls that you've placed up. Now, if you appoint an MLRO, you do KYC, you do record keeping, you do communication and training, but maybe after some time you just simply leave it. So that means you are not monitoring your progress. So you have to keep on monitoring what is happening, right? That's what ACCA suggests. That this is what you should do against money laundering. That's a question in itself. You might find it in question number 2 or 1. Now, guys, after doing all of this, let us do some direct theory questions. After money laundering, what are the direct theory questions that I want to cover with you in this session today? So let us consider the 8, you can say, features of your quality management, which is ISQM 1. Okay. So what are ISQM 1? Let's discuss that. What are the 8 features? I'll just brief you those features. I've taught this already to you in my sessions if you are here from my batch. If you're not from the batch, then I think you must have done it in your syllabus from wherever you prepared it, but I'll just revise it with you. As the name suggests, this is the grand vision. So now the next question is, what is ISQM 1? Because why I'm doing ethics and quality management together, because that's how we get the question. In the exam, we get the question, write the ethical and the quality management implication. So we should know both of them together. What is ISQM 1? See, audit is always based upon judgments, and you should apply skepticism in the process of audit. So in this case, what happens is that we are applying a lot of judgment. So we will say in the process of audit, there is a lot of judgment which is applied, plus there is a lot of skepticism that we apply because there are variety of clients and we cannot have tick the box approach. So it's like you can't simply say that I will do the audit in this way. You can't have a tick the box approach. You have to have a very dynamic approach to the audit. As and when the situation arises, you should be able to deal with that situation. So judgment and skepticism is applicable because we have a variety of clients and we cannot have tick the box approach. So we have to maintain the quality at all times. So I can't say a good quality audit is where the audit is done in this way. No, I can't make a way for audit. Like for accounting treatment, we always have a way. This is how you account for it. In audit, we can't do it because audit is something which is dynamic. It depends upon case to case, client to client. So I should have an overall, you can say, system of quality management. So I should have an overall system of quality management so that I can, manage the quality of audit at all times. So what is this system of quality management, or what are the elements of system of quality management? That is what is given to us in ISQM. So the first element is firm's risk assessment process. Now, when I say firm, here I'm talking about audit firm. Audit firm will have quality management systems. Okay, it's not the client or anyone else; it's the audit firm. So the audit firm must design and implement such a system whether they are supposed to identify the risk, where they are supposed to identify the risk. So how can you identify a risk? See, what comes under this? We say firm must design and implement a process to identify the risk. The firm must consider its size, environment, specific situation, networks, and external service providers. External service providers. What do I mean by this? It's basically that as an audit firm, I should not have such a situation where I fall as a firm, as a business. Imagine a situation I was auditing 10 different clients and then suddenly my company goes in losses and I am totally helpless and I'm not able to audit my clients. I fall off the deadlines. So I should have such risk assessment processes, not just for my clients, but also for myself. I should be able to design and implement such processes where I'm able to figure out what are the risks am I facing as a firm? What is the size of my firm? What are the environments that I'm working in? What are the factors in the environment which affect my risk profile as a firm? Whether I should use some external service providers. You should have, like, for example, if you have all auditors who are from, IFRS field and all, but then you also need someone who's doing valuation. So you will get an external service provider for that. So you should have this risk assessment process, right? And what we will say here is that this risk assessment process is ongoing. This is not something which happens once and then you forget about it. This is ongoing. And you are supposed to keep a track of, ever-changing situation. So a firm should have such risk assessment process in place if you want to give a good quality audit. If you will be, I've heard this and I believe this also and experienced this also, that if as an entrepreneur you are unwell, your business will be unwell. If you are confused, your business will be confused. If you are sound, if you are healthy, if you are mentally well, your business will go well as well. So that's very important that if you're talking about a good quality audit, our audit firm, should have a quality environment in their firm. They should have a quality business health of their own firm. So we should have some risk assessment process, right? Then governance and leadership. Governance and leadership. Now, what is this? What do I mean by this? Here I'm basically talking about the tone at the top. I'm talking about people who are CEOs. I'm talking about the people who are chairmen of what? Chairman of audit firm. Now, if the chairman or CEO of the audit firm is just money-minded, he doesn't value ethics. He doesn't value ethics over money. Then even the audit team, even the audit team and the auditors will not value ethics because their boss is not doing this. So it is very important that the tone at the top, the ethics at the top, that means the ethics should flow in the audit firm's veins. Every person at the top level, middle management, junior management, they should be like fearless. When they go to a client, they're like, oh, our firm's value is this. Our firm's value is, firms, when you say firm's value, that value doesn't come with what you write on your website. Value comes from how you act in your own firm as well. So you should have such governance and leadership where you keep quality on focus. So we should have a firm-wide focus on quality, right? Firm should demonstrate a commitment to quality through its culture. So the tone at the top should be of quality. So we should not focus on profits and clients, but on quality of audit, right? Then what else? Okay. So if you do this, what will happen? Engagement partners will confidently challenge the client's judgment. See, if you have values in your firm, like if you're not someone who is focusing on, I should not lose my client, if you're not a people pleaser, then of course, if you have such a setup, such an ethical setup in your firm, even if the client is wealthy, very important client, material client on whom you're dependent, you will never ever face a challenge in telling them that they're wrong. As an auditor, you should have that leverage and that independence that you tell them that this is the wrong accounting treatment, this is how you. So if you don't have that leverage, if you can't confidently say that, if you're a people pleaser as an auditor, you'll fail, right? That's a bad quality audit. Then third element is relevant ethical requirements. So as an audit firm, you should teach all your audit team members or audit employees about certain ethical requirements. You know what these ethical requirements are. You should train your employees regarding faultless compliance with code of ethics. You should tell them, even our component auditors in the group audit, we should tell them how to do audit as per code of ethics. And ethics just do not depend on the code of ethics which are given to us by ACCA. There are various other factors involved in ethics. Like ACCA are giving us international code of ethics, but there are more code of ethics. Indian CA has their own code of ethics. The Canadian CA would have their own code of ethics. So it's like it is not just specific to international standards, but there are more jurisdictions as well. And we should always say that if ethics are not met or are not met within the case study, then the quality is also. So quality and ethics are very related to each other. So that means I should train my employees for various ethical requirements. That's a process of quality management. Then what we have as a fourth point is acceptance and continuance. Acceptance and continuance of client relationships. So whenever we get a new client, we should assess their integrity and ethical value. So we should also assess integrity and ethical values of client and its management. So it's not just that we should do it for ourselves or for someone who is our client, but we should do it for our existing clients also. So it's not that we should just focus on the new clients, but ongoing clients also. If someone is a client since 5 years, that doesn't mean that you will ignore this. They might have got indulged in illegal activities during that phase of time. So you should keep an ongoing check on them, whether their integrity is intact or not, whether their ethical values are intact or not, right? Then we should perform audit firms. We should also check audit firms' ability. When we accept a client, we should see whether we are having the ability to perform engagement. That means we have enough knowledge, training, and experience. For this, that means when we accept a client, we should see whether we have enough knowledge, training, and experience for the same or not. Then compliance with ethics. We should always make sure that we are having the compliance with ethics. That means whenever we accept a client, we should make sure that we are not facing intimidation threat, we are not facing self-interest threat, we are not facing management responsibility in this case, we are not facing any advocacy threat in this, etc. So it's like you have to make sure that whenever you accept a client, you perform certain procedures, and the acceptance procedures you're all aware of. I've given you a gist of it. You check their integrity, perform KYC, see whether they're not involved in illegal activities. You see whether this assignment does not give rise to any ethical issues. And if it is giving rise, let's suppose you are already auditing Pepsi company and now you're getting into the audit of Coca-Cola. So while accepting Coca-Cola, you should consider this. This is a part of your acceptance procedures, and that enhances the quality of. Then if I talk about the fifth point or the fifth element, it is the most important. important one, which is engagement performance. So if you are an auditor and you are auditing your client, you should perform a good quality audit. How can you ensure a good quality audit? A good quality audit will have a good direction. So there will be a good direction, supervision, consultation. That means whenever you need consultation, you seek for it from external parties, review, and resolution of disputes. So basically, direction, supervision, consultation, review, and resolution of disputes. So direction is if you have a planning meeting, when you get a new client on board, you understand that client as an engagement partner, you actually direct your audit team that this is the allocation of work, this is the direction you all will work into, which is why we conduct the planning meeting. If in the case study it is given that the planning meeting was not conducted, you will simply specify that if the planning meeting was not conducted, that just simply means that we are not having a good quality audit, because planning meeting means lack of direction in the audit process. If you will not have a direction of what are these key areas, what are the duties that we are supposed to do, then what's the point? Then supervision at all stages of audit process. There should be supervision. I've told you this already only, that we should have supervision from, like, if the work is performed by junior, it should be supervised by the senior. Senior's work should be supervised by the manager. Manager's work should be supervised by the engagement partner. So that's how it works. You have to have the supervision at all stages of the audit, right? So that's a good quality audit. Then high materiality. For example, if they've kept a high materiality in a risky client. So if the client was risky, but you kept high materiality, that means it's a bad quality audit, right? If they say no review was conducted, no review by the audit engagement partner, we will say this is bad quality audit. Why? Because no review means there is lack of supervision. Lack of supervision means that all the audit team's work that has been done, that is not being checked once. That means there's a risk that there are some material misstatements which have gone unnoticed, which increases the detection risk and finally leads to bad quality audit. Then if they say audit is done in less time, audit is done in less time. This is given in the case study. So you will say, if we have done it in less time, that also means this is a bad quality audit, because then you might not have you might not have done substantive procedures. So you might have cut down on substantive procedures. So that even suggests a bad quality audit. So these are the points that we actually write in the engagement performance. Then sixth point is human resources. I told you this already, that when you get into the audit of a company, you should have your resources. You should have the resources in timely manner. Okay? So resources in timely manner. Employees should be there with required knowledge, training, experience, sufficient level of seniority employed for complex area. As I said, that if the audit junior was auditing derivative, so we will say that the human resource point of quality management is breached here. So that's what the human resource point is. That for every complex area, we should have a senior person who's auditing that complex area. And if we are not doing this, this is mismanagement of our human resources. Then we should hire independent clients or experts wherever necessary. So wherever necessary, I should have independent experts who are auditing that certain area, right? Then what is the seventh point? Seventh point is communication. Communication and information. Communication and information. So basically what is included here is that we should communicate and train our employees. Like we should tell them that communication is very important. So how to communicate is also very important. So if you're auditing something to TCWG, if there was an internal control deficiency in the client and you're communicating this to TCWG, how should you communicating it and what should be the timing of the communication? All these things also ensures a good quality audit. And lastly, it's about the monitoring. You should always keep an ongoing check on your monitoring. That means ongoing check on all the controls that you've placed above. If you have a risk assessment process, keep on monitoring it. If you have good human resources or not, keep on monitoring it. If you are training your employees for ethics or not, keep on monitoring it. Whether your governance and leadership are setting a tone at the top or not of quality over money, keep on monitoring. That's how you attain a good quality audit as per ISQM. These are very important 8 elements of ISQM1, which can be asked as a direct question. Not just direct question, they can even be tested in the case study, in application based. The quality management and the ethical issue is the most favorite requirement of the examiner. So make sure you are a pro in doing it. Yes. Okay. I hope you all are clear till here. Any doubts? Consultation review. What do you mean by consultation review? Okay. Uh, Consultation, you might get a consultation from anyone as an auditor also, as you can get external service provider for valuation. Similarly, maybe the client is going through some court cases or something, so you might consult with the lawyers. What will be the outcome of that? And that is basically the consultation, right? Difference between engagement quality reviewer and engagement partner. See, engagement quality control reviewer is someone who is not involved in that audit. See, as an audit firm, let's suppose TGP is an audit firm, hypothetically, not marketing anything. Hypothetically, the TGP is an audit firm. I have an audit team who's auditing a company. Okay. So I will have an engagement partner. Under the engagement partner, there will be various auditors like juniors, seniors, mix of everything. And now who's the control engagement control viewer? That person is the audit engagement partner will be on the top of the audit. This person's level, other person from my audit firm who's doing audit of some other client, but he's also a senior level person. And if I'm doing an internal control, okay, internal quality control, so I will hire or I will have such allocate work to this person to review the quality of the team A, right? He's of the level of engagement part, but he is not involved in the audit of that client. But he will still check whether the quality of the audit was right or not. If you get it from outside the clients or outside your own firm, that is also valid. You can get an external quality control review as well. That would be a person of the rank of engagement partner, but outside your. That's the. There will be a live last time. Yes, there will be a live for SBR tomorrow, 6 p.m. Okay. Let's go on. Okay, let's go on. We have more to cover. We can't stick to this. This was just a small concept. Let's discuss about some important direct theory questions like NOCLAR and fraud, the two most important ones. After that, I will move on to audit risk, business risk, and the application part. That one is very interesting and simple. So let's not waste our time. Let's move forward. So let's discuss our auditor's responsibility regarding NOCLAR. So this is question number 8. Auditor's responsibility regarding NOCLAR. What is NOCLAR? Non-compliance with laws and regulations. See, it's always the management who's responsible for NOCLAR, right? So we will say management has the primary responsibility for compliance with laws and regulations. So management is responsible with compliance for the compliance of laws and regulations. What does the auditor do then? Auditors are responsible for the compliance which affect the financial statement. Only the compliance which affects the financial statement, because auditor at the end of the day is just auditing the financial statement. So what is the thing that the auditor does? As per ISA 315, the auditor will first understand the laws and regulations which are applicable to the client. So he will first understand the legal environment of the client, and he will first understand the laws which are applicable. Now, if a NOCLAR is identified, if a NOCLAR is identified or suspected, then the auditor is supposed to gather evidence regarding the nature and circumstance of the event, and how does it impact the financial statement. So basically, if a NOCLAR is identified in the situation by the auditor, so auditor responsibility is not to avoid NOCLARs. The laws and regulations are primary responsibility of the client. If you're running a business, it's your responsibility that you comply with all laws and regulations. Auditor is just here to see whether you're preparing the financial statements correctly or not. So if there is a NOCLAR which affects the laws, which affects the financial statement, that's when the auditor's responsibility gets activated. So he will then see that, okay, how does it impact the financial statements and all? And then he will gather some evidence that what situation has happened, how does it impact, the financial statements. So that's what he does. And to whom do you report? Whom to report NOCLAR? You first report the NOCLAR to TCWG, and then after reporting it to TCWG, if they do not change it or if they do not take any steps, then you disclose it to third party. For example, if you see that they're not complying with certain laws and regulations, go and complain against them. But you will only do it if it is in public interest, if you feel this is in public interest. And for that, you can seek legal advice. So that is the auditor's responsibility regarding NOCLAR. So who's responsible for the NOCLAR? Primarily, it's the manager. So if there is a law and regulation which directly impacts financial statement, the auditor's responsibility is to collect sufficient and appropriate audit evidence regarding its compliance. So auditor is supposed to make sure that the client has complied with this. And if it is indirectly impacting, it is indirectly impacting the financial statement, in that case, the auditor is just supposed to be professionally skeptical. So he's just supposed to maintain professional skepticism. That's it. So this is what we actually do in our auditor's responsibility regarding. Then, what is the question number 9? Auditor's responsibility regarding fraud. Okay, what does the auditor does when there is a fraud situation? What is the fraud situation? Fraudulent reporting is there. What are these fraudulent reporting? Fraudulent reporting includes incorrect, you can say, accounting treatments that you've done on purpose. Maybe you have overstated or understated something on purpose intentionally, or maybe you have some ghost employees, you have some bogus customers, right? This is known as earnings management. You all know about window dressing. This is window dressing. When you do it on purpose. So basically, fraudulent reporting is window dressing. When you try to overstate things just because of your selfish needs in the financial statements, that is known as fraud. Then apart from fraudulent reporting, there is also something known as misappropriation of assets. which is also a fraud. Misappropriation of assets. Okay. When you use the assets for your own use, for example, if there is an employee and he's trying to use that asset for his own use, for example, he has stolen something, so there's a theft of cash. Even that is misappropriation of asset. Now, for the fraud part also, management has the primary responsibility of prevention and detection of fraud. So management has the primary responsibility for prevention and detection of fraud. Auditor, in all good circumstances, fraud is something nobody wants, that the perpetrator of frauds never wants that he gets caught. If you have committed a fraud, you would never want that you get, you are caught in a situation or someone catches you. So that is why fraud in itself is something which is very difficult to identify. Because the person who's committed the fraud would always make sure that all the evidences are wiped out. So auditor in all good circumstances might not be able to detect fraud, right? Even if the auditor works to his best possible quality, because nature of fraud is that the perpetrator of fraud wants to conceal his act, wants to always conceal his act. Also the evidence that the auditor might gather is persuasive in nature and not conclusive. What does that mean? It is simply that, you are suggesting that there might be fraud, but there is never a proper conclusion that this person committed fraud. Like, there is a investigation agency in every country. Like we have CBI, like Central Bureau of Investigation, right? In India, we have this agency. So people are trained as if they're supposed to find who's the criminal, who's done this, who was the person who committed the murder. So they are trained in that way. And even those people sometimes are not able to find the actual perpetrator of that criminal activity. Now we talk about auditors. Auditors are like us. They've done ACC. And then they're asked to find who's the perpetrator of fraud. So it is very difficult for them because the evidence even that we get are persuasive. They're like, you have to link this evidence with that, connect the dots, and then find who's the perpetrator of fraud. So that becomes very difficult for us to identify fraud because of these reasons. Then auditor does not perform procedures on 100% of the areas as substantive procedures are performed on material heads that too many times sampling methods are used. So whenever you're performing work as an auditor, you do it on, you perform substantive procedures on material headings, and that too on majority of the places you're using sampling method. You're not checking the 100% of the population of invoices, transactions, and events that have happened. Rather, you audit just on the basis of samples. So what happens is, why I'm writing this? which suggests that many events indicating fraud might go unnoticed by the auditor, right? Because auditor just meets the client for like 2-3 months in a year. Now he is like, he might skip on those events. Then all that the auditor can do, these are direct questions that you might get. So what I'm writing, if you just learn this, you can write a 5 to 6 marks. So all that the auditor can do to detect fraud is to be professionally skeptical, okay, and to lead the inquiries with the management going on regarding any contradictory evidence or unusual transaction which has happened. So basically, as an auditor, you cannot detect the fraud. It's very difficult for you. If you identify, of course, you should do work on it. But if you're not able to detect it, know that it's not your fault, because fraud is such a thing which is like done to conceal. So it's very difficult for you to figure out a fraud situation. So you have to just maintain professional skepticism and make sure that you keep on your inquiries going on. If there is any contradictory evidence which suggests possible fraud, keep like dive deep into that situation. That's what is expected out of you as an auditor. Then we will say, however, auditor, however, is responsible to identify the risk of material statement due to fraud. So if auditor has lacked his duty of care to substantive procedures, on a risky / material area, then yes, up to certain extent, auditor is responsible for fraud. So what I am saying in this last point, we are just saying here that, see, auditor cannot detect fraud because fraud is this and that. We all explained that in the first 5. But when we talk about auditor's responsibility, he's supposed to find the risky area. So he's supposed to find that if there is any misstatement due to the risk of fraud. So if he was not able to find that risky area, okay, because he did not apply knowledge, training, and experience, or he was just in a rush, he just wanted to complete his process of audit. So that means he lacked the duty of care at that point. So yes, in that way, he might become responsible for the fraud, but not directly that, okay, it was auditor's responsibility that there should be any prevention or detection. No. If there was an ROMM, which was a risky area, and auditor should have identified the ROMM, but he did not identify the ROMM because he lacked the duty of care, not because he was, genuinely not able to do it, but he was just being negligent. So if his duty of care was breached and that is proved, okay, then yes, he's responsible for the fraud. Otherwise, he's. Now, when we say NOCLAR and fraud, we have understood that auditor is having a secondary responsibility for both of these things. Now, how do you know that the auditor has breached? Next question is, how do you know that the auditor has breached their duty of care? So question number 10 is about the liability of the auditor. Professional liability. So professional liability. See, if you want to say that the duty of care was breached, first thing is, you know, the first thing is the duty of care must exist. Duty of care must exist automatically. See, automatically the duty of care exists between client and audit firm. So if I want to say that auditors, why do we say these days auditors are someone who are leaving their jobs? Because they are being held accountable for a lot of things that they don't want to be held accountable. Auditor is someone that if a client does a mistake or is involved in a fraud, he's the first one who's being arrested or who's being taken into investigation. Why? Because he's facing professional liabilities. He's signing the audit report. People invested when scams happen, companies run. People, they just take hold of the auditor. Dude, you said this company was right. We invested because you said they were true and fair. And now you are saying that this company has run away or ran away. This is something which is very bad, and this is something which calls for action from the law. So, what is professional liability? When is professional liability breached? There must be a duty of care first. So, yes, between a client and an audit firm, automatically the duty of care exists. Then we must prove, or the person who has, you can say who has filed a case against the auditor must prove that there is a breach of duty of care. So there is a breach of duty of care to any reason. You should be able to say maybe the bad quality audit, maybe negligence was there, maybe there was no supervision. So there is a breach of duty of care, and that has also led to financial loss to the client. So the client should mention and he should quantify that what loss they have incurred because of the breach of duty. And if these three things are there, then yes, the auditor is held accountable, and that's a civil case which can be filed against the right. Now the question comes how the auditor can limit his life. So if I talk about question number 11, the question which can be asked to you for direct 4 to 5 marks, how to limit auditors liability. How to limit auditors liability. See, the auditor's liability can be limited, first of all, that you accept such clients who will not have such actions. You do not, as an auditor, do not accept clients who are involved in fraud. So you should have acceptance procedures. So when we say acceptance procedures, in this way, we are trying to say that prevention is better than cure. So it's better that you do not accept such clients who might in future get involved in fraud. Then you should always have documentation that even if you are sued, you as an auditor have documents of your client for 5 years at least. Then in your auditor's report, you can give disclaimer of liability. What is disclaimer? Like you tell that this audit report is just made for shareholders or just made for tax authorities. You should not say that this is for the whole public. Then anyone out of the public can come out and sue. So it's better that you make a disclaimer of liability that saves your skin a little bit, right? Then you can cap the liability, cap the financial loss. So as an auditor, how much will I pay as a penalty? We always write it in our engagement letter in audit report that, this is the cap. So the cap is maybe a proportion of the client's revenue, maybe multiple of your audit fees. So you cap it so that person or if you are even sued and proven guilty, you're not supposed to come on the road and sell off all your assets, right? So you should cap your financial loss that you would get. Then as an audit firm, you can register yourself as limited liability partnership so that your personal assets are not attacked in certain situations. And the most important thing is engagement letter. So in the engagement letter, you actually write what all things you're responsible for, what all things the management has to be responsible for. So when the case goes into the court of law, you have that paper with you, that agreement with you, where you say and you save your skin that yes, I was responsible for the audit, but these are the things which we have already written that if there will be a fraud, management is responsible. So we are just passively responsible for the fraud and not for primary responsible. So it's very important that you use engagement letter. Correct? So this is how you can cap your auditor's liability. So this ends our direct theory questions, which can be asked. Just have a quick look of what we have done till now. We've discussed about the objective of audit. We've discussed about professional skepticism. We've discussed about ethics and various situations of ethics. We've discussed about money laundering. Then we have discussed very important thing, which is ISQM 1, which are the principles or elements of quality management. There is ISQM 2 also, but I'm not revising that because the most important is ISQM 1. You can do that yourself. Then we have we have the auditor's responsibility regarding NOCLAR. Then we have auditor's responsibility regarding fraud. And then we learned about what is professional liability and then how the auditor can limit his liability. Now, finally, we will move into the application part of AAA, which is risk, procedure, evidence, review, and okay. Now comes the business risk. Question number 12. How can you write your business risk? In question number 1, you get this business risk question, right? So how to write business risks? Again, you have to apply your evaluation skills. You can't be, just to the point and say this is the business risk. No. So, for example, in the question, they have written about competition. There's a competition that is coming up, or this we are working, our client is working in a situation where there's a lot of competition. So, business risk always comes from the perspective of CEO. Become the CEO of your client and then think. So if your client is facing competition, you will say, now the customers will have a substitute. Okay? They will have a substitute available. This will lead to loss of customers. Okay? And then this will lead to loss of revenue. And finally, this will impact my profitability, which will further impact my going budget. So it's like you start from a small point and then you end up giving it a very drastic turn. So it's more like you're overthinking. You're saying, because I have a competitive market and this can happen, and you overthink in a negative way. Okay? That's what business risk is. That's what CEO should be ready for. Right? So you being a CEO, you can't be like, oh, I am manifesting all the positive things. I don't think about what all bad can happen to my company. No. You have to be ready for all the worst things as well. Right? Then, for example, they've written that there was a foreign expansion. I'm giving you some famous business risks. Foreign expansion. Your business risk is overthink. If my client, so if I am expanding overseas, what if I fail? Yeah. What if the expansion fail? This will be a cost and this will cause me cash drain, which will again impact my going concern. And because my focus will shift from my current activity to expansion, even the current activity can face a downfall. Then let's suppose they say that there was a significant expense on advertisement. This is given to you in the question. Now you will say, because there was a significant expense on advertisement, the overthinking of ours as a CEO will say, what if it does not give desired results? This will again cause cash drain and losses, again impacting going concern. So this is how you answer your business risk questions. So in business risk questions, you act as a CTO and you think about the negatives which can happen due to certain things which is going, right? So this is how you actually look into the business risk questions. Mostly business risks are 2 marks are allocated to each heading. So write your answers in that way. Heading, analysis. Heading, analysis. Give 2 relevant points within that heading. okay, in paragraph. Then comes the next question, that how to write ROMM and audit risk questions. How to write them? See, what is risk of material misstatement? First of all, it includes inherent risk plus control. What is audit risk? Audit risk includes inherent risk, control risk, plus detection risk, right? Three things are there in audit risk: inherent risk, control risk, detection risk, whereas ROMM just has inherent risk and control risk. If I talk about materiality levels, materialities are based upon PBT, revenue, and assets. And these days in question number 1, they already mentioned that base your materiality on PBT, revenue, or asset. Whether to keep it on the lower side or the higher side depends upon the risk profile of that company. If you think that client is new and is a listed client, then you will keep the materiality on the lower end, because then it's a risky client, right? So you are not sure of it. If during that year the client has undergone some important restructurings, has undergone something which is unusual, then also you will keep the materiality on the lower side. So the materiality is dependent upon various factors, like what is the risk profile of that particular company. Basis that we will decide the materiality. Right. Now, how do you answer your audit risk question? You first talk about materiality of that risk or that transaction or account balance. Let's suppose they said that during the year a new subsidiary was purchased. So you will first assess whether that subsidiary was a significant component or not, whether it was material or not. Then you will talk about its treatment. How do you account for a acquisition? You will talk about its treatment as per the IFRSs. How you guys can know the IFRS treatment? Please visit SBR's Grand Revision, which is going to happen tomorrow, same time. You can watch it live, or if you want, you can watch the recorded version, which has already happened in the last quarter. So first we talk about materiality, then we talk about its treatment, and then we talk about the risk. Now, we are not saying that the treatment currently done is wrong or right. We just simply say that there's a risk that this might have gone wrong. So let's suppose in the case study, they've given that we purchased derivatives. We will say what was the purchase price, materiality of it. What is the accounting treatment of derivatives? We will mention IFRS 9, fair value through profit and loss. Then the risk is that we have not correctly accounted for it under IFRS 9. So maybe our financial asset or liabilities are misstated. When we are not supposed, when we do not know whether it is under or overstated, we can write the word misstated. That gives us 3 marks. So this is how you write your audit risk or ROMM answers. That's the question number 1. And the content of it is very simple. You get it from IFRSs. I'm sure you must have done a lot of questions by far on audit risk and ROMM. Right? Then question number 14. How to write procedures. How to write procedures. See, for procedures, you must know something which is assertions. So if I talk about assertions, what are assertions? Promises made by management. Promises made by management. So as an auditor, you're checking whether the promises made by the management are right or not. So if I talk about profit and loss, the assertions are occurrence, OC3 cap, that's the acronym I use, occurrence, cutoff, classification, completeness, accuracy, presentation. So basically OC3 cap. So in P&L, you're checking these assertions, whether they were correct or not. Occurrence, whether the expense has occurred or not, whether the income has occurred or not. Cut off, have you recorded it in the correct year or not? Classification, have you correctly classified the direct and indirect expense, research and development expense? Completeness, have you completely recorded all the expenses and incomes? Have you recorded them at the correct amount? Accuracy, presentation, are you correctly presenting them in the correct statement? So that are those are the assertions that you're checking in the P&L. Then you have the assertions for SFP. What are these assertions? You check reval. Basically, as an auditor, you're checking whether the certain asset and liabilities, you have the rights and obligations over them or not, rights and obligations, whether they actually exist or not, so existence, whether they're correctly valued or not, so valuation, whether they are accurate or not, so accuracy, then their classification, whether correctly classified or. So you check these things as auditor. So when you're making your procedure, please listen very carefully to me. When you're making your procedures, there is a technique follow. What is that technique? You first write the verb, okay? You first write the verb, then which document on which you're performing that verb, that work, and why are you doing? Let's understand it. Let's suppose they ask me to write procedures on depreciation, very famous example that I always give. You will say recalculate. So recalculate is verb that I'm writing verb. You know what is a verb? Action doing work. So recalculation is a work that we do. It's an action. So recalculate. What are you recalculating? The depreciation. So that's the work that you're doing. If you just say recalculate the depreciation, you will get half a mark. Now you're supposed to say, why are you recalculating the depreciation? So recalculate the depreciation to check the mathematical accuracy of the amount. So what am I checking? Depreciation is an expense. I am checking the accuracy of that expense. So which assertion am I checking? Completes my answer of procedure. For this, I get 1 mark. The question was asked for 5 marks. You will give 5 such points. Similarly, let's talk about a procedure on IFRS 13. Let's suppose whether the fair value was measured from the correct level or not. So inquire from the management to understand the assumptions they have used to value the asset, to check the reasonableness of the assumptions. Now, this is a situation where we are not using any assumption as is. We are just simply trying to make a point that why do we want to inquire from the management? If you say inquire from the management regarding which level of input they have used. So what will we say about it? What will we say about it? Inquire from the management to understand the assumptions they have used to value the asset, to check the reasonableness of the assumptions. So basically, we're just telling them that we are supposed to see whether the assumptions made are correct or not. So to see whether they are correct or not, we need to at least talk to them, inquire with them. So inquire from the management to understand the assumptions, whether they've used, which they've used to value the asset, why they have used level 1, level 2, or level 3. Then you can even say, let's suppose you were valuing some shares. So obtain the share certificate to verify the actual share ownership. To verify actual share, or to verify the existence of share ownership, right? So this is what we mentioned. Now, for example, they ask you some procedure on IFRS 2, share-based payment. So in share-based payment, just think about the standard. So share-based payment, if I talk about equity settled share-based payment, it's like I'm issuing share options or I'm issuing SARs, but equity settled means share options to my employees as a return of their service that they're giving to me. So that means what is the journal entry? Expense debit, equity credit. So let's see what happens there in IFRS 2 is number of employees. So we will say inquire from the management to uh, understand their assumptions behind how many employees will will remain in service to get share-based payment. So how many number of employees? Number of employees matter a lot. Uh, how many employees will remain in service to get share-based payment, abiding by the listing condition. Then you can even say recalculate the employment expense to verify the accuracy, right? You can recalculate it yourself. So that's how you actually type your procedures out. And yes, you can mention IFRSs as well. You can mention the IFRS when you are talking about the procedures if it is required, but most of the time it is not required. So this is how you write your procedures. Now, similar way, you can even write your evidences. So basically, you are in evidences, you're talking about documents. Which doc should be there in the audit working file? Uh, that's what evidence is. So basically, for example, if I say recalculation, or let's suppose I say review, obtain the board minutes. That's the procedure. So a copy of board minutes is your evidence. So what is evidence? Copy of board minutes. Why do you need the board minutes? To verify the receipt of authorization to buy new subsidiary or something like that, right? Then, for example, you say recalculation. So your calculation, your working, copy of your working is your evidence. Then if you say that physically visit the site where there was the asset, you can say photographic evidence of your visit. Photographic evidence of your visit is your evidence to be put in the audit working file. So procedure is the work that you are doing. It's a verb. Recalculate, obtain, understand, inquire, inspect, reassess. All these things are verbs and procedures, whereas evidences are the documents which are there in your working file. Right? Then okay, this is how you write your procedures. Now, what we will talk about is our reporting part. And then we will finally talk about the technical article, which is related to your, first of all, we have technical article, which is important from sustainable reporting. And then another one is big data. So I'll discuss about these two technical articles and little bit about other assignments. Okay. So let's first talk about our review and reporting. So we've discussed audit risk, we've discussed the procedure and the evidence. Now comes the application part of review and okay, reporting. So this is our question. Which one? 15. So question number 15. Let's discuss this. What goes into an audit report? See, the audit report is Tau Cora Read. Tau Cora Read. So T stands for title of the audit report. A stands for addressee. So to whom have you addressed this report? Then O stands for your audit opinion that you've given. Then basis of audit opinion, why have you given this opinion? So basis of audit opinion. Then what we have is K stands for CAP and O stands for other information paragraph. R stands for responsibilities of the management regarding financial statements, then auditor's responsibility. So these are the most important part. The rest, the read part is something that you can ignore. That is basically engagement partner signs, auditor sign, date of the report, right? So just remove that. So these are the things that we have. Now, what happens is, please understand. Okay. Let us understand the type of audit opinions which are given first. So what kinds of audit opinions do we have? First of all, qualified audit opinion. See, if the misstatement in the question, misstatement is just material but not pervasive, that is when you give qualified audit opinion. And what is pervasive? Pervasive is that the misstatement is not widespread and it is not very huge in size. So if you say that the misstatement is 60% of total assets, that's a pervasive misstatement, huge in size, right? And that is based on judgment. Now you can't say what is the threshold, there's no threshold. Then pervasive is also if it is, if there is a disclosure which is misstated, which is fundamental to users' understanding. For example, disclosure regarding going concern. What you are supposed to disclose regarding going concern? If you have prepared your financial statements on alternate basis, that means you've used backup value basis, then you're supposed to disclose it. Because if you don't disclose it, users will not understand that you are no more a going concern. So if you miss that disclosure, that is also a pervasive misstatement, not just material. So if the misstatement in the financial statements, which the auditor has detected and the management has not, completely amended that misstatement, even if you communicated it. So as per the ISAs, when the auditor finds a misstatement, he's supposed to communicate it to the communicate it to the TCWG. And TCWG is supposed to work on it. So TCWG is supposed to amend that misstatement, rectify that misstatement. But if the TCWG does not rectify it, then the auditor issues a qualified audit opinion, which is a modified audit opinion given. Then there is an adverse audit opinion. When do you give adverse audit opinion? If the misstatement is material and pervasive, both, right? Then when do you give disclaimer of opinion? You give a disclaimer of opinion if there was lack of evidence and pervasiveness. That means you were not having evidence regarding a misstatement which was pervasive, or let's suppose there was a fire in the client's entity, so there was like all the documents were burnt away, so you don't have invoices and everything available. So now you have to deal with it. So there's no evidence. This is a widespread thing. There are a lot of transactions regarding which I do not have sufficient and appropriate audit evidence, which is why now I will give disclaimer of opinion. Right? So these are the three kinds of audit opinion that we give. If we give any such opinion, then our report is modified. Because whenever the name of our friend Tao Bakura changes, the audit report is modified. So if you give a qualified opinion, the heading will become qualified opinion, and the this heading will become basis for qualified opinion. So whenever you change your opinion, you modify your opinion, your report, audit report is also modified because the name of your friend changes. Right now, the name of the friend in case of unmodified report is Taum Koralit. But if you modify your opinion, of course, your audit report will also modify. Right? Then, if I have to give you a proper definition of what is pervasive, how should you know what is pervasive? What is pervasive? Any misstatement which is widespread in financial statement, any misstatement which is a significant portion of profit, revenue, or asset, then any disclosure which is misstated, and is fundamental to users' understanding. For example, disclosure on related party transaction plus a disclosure on breakup value basis, going concern. Right? Now, once you figure out that there is a misstatement, question arises, don't you report this to TCWG? Why they still let the misstatements be there? So question number, this is question number 70, because this was question 16. So question number 70. What matters are communicated to TCWG? What matters are communicated to those charged with governance? See, auditor's responsibility, first of all, TCWG, once you've completed your audit, you again communicate to them, these were our responsibilities. Then we also communicate planned scope and timing of audit. Then whatever were the significant findings from the audit. For example, significant findings involved like complaints which the auditor made to the TCWG that while the process of audit, we wanted this information, but this was delayed. So we even tell them that what were the areas of highest risk in the whole process of audit. So we tell them the significant findings. Then we also tell them about any risks which the auditors face regarding independence. So when we used to say that, there is an ethical threat, talk to TCWG. It was a safeguard, no? So when you talk to TCWG, how do you talk to them? You report it or communicate this to them via the communication that you prepare to TCWG. So this is what I'm talking about. What matters are communicated to TCWG. Responsibility of the auditor, scope and timing of audit, significant findings in auditors, independence issues. Now, you know how to give audit opinion. But there are some paragraphs here. For example, CAM paragraph, other information paragraph. Then you heard about MURGC, EOMP, OMP. Let's discuss about all these paragraphs. So question number 18. What are the various paragraphs involved in audit report? Okay. What are the various paragraphs which are included in audit report? First of all, CAM. What is CAM? Any issue out of, or you can say issues reported to TCWG are wide, but few issues which are considered as highest risk areas of the client by the auditor are mentioned in the report as CAP. So basically the issues that you communicated to TCWG over here, out of these issues, you pinpoint the most important ones and then you include them in your audit report as CAM para. And you do not repeat these. If there is a misstatement regarding that highest risk area, you don't keep it as a repetitive, right? So you don't repeat this and this is what you do. Okay, next. What is the placement for this CAM paragraph? This is placed after basis for opinion paragraph. Then, okay, what do you report in CAM? See, you tell them why that particular, what is key audit matter, that is what you write in CAM paragraph. And you tell them that why do you consider that particular event as CAM and how did you deal with it? How was it dealt in process of audit? That's what you write under the CAM paragraph. Then comes EOMP paragraph. Emphasis of matter paragraph. This is basically a positive paragraph. We don't talk about misstatements here, but in emphasis of matter paragraph, we basically talk about or we draw users' attention to correctly recorded or disclosed account balance, transaction. Okay. Do not talk about misstatements here. So we are talking about everything which is correctly accounted for, disclosed, we've treated it correctly. We're just pinpointing that, okay, this is something which is correctly recorded. You can find it in this part of the financial statements or this disclosure notes. We are just drawing the user's attention to something which is correctly disclosed, right? That is emphasis of matter paragraph. Then what we have is other information paragraph. What is other information paragraph? So, for example, chairman's statement, CEO's statement. So what we say in other information paragraph is that what are the auditor's responsibility regarding these? Now, these are not, other information is not included in financial statement. Now, statement of someone, let's suppose in the media, they say that this is what we want to achieve. This is 60% of it is we have already achieved. So they're saying something in the public, which is a statement that they are passing. So auditor's responsibility is that they also check these statements. So you write about this in the other information paragraph in a Taubkora. So in a Taubkora, O stands for other information. So you write the auditor's responsibility regarding other information. But if there is an inconsistency, if there is an inconsistency in the chairman's statement and reality, then the other information paragraph shifts from after CAM to after basis for opinion. See, if there is an inconsistency, if there is no misstatement about other information, then Taub-Kora is the correct way to write. Taub-Kora. That means the other information will come after CAM. But if there is a misstatement, that means the chairman was saying X thing, but the reality is Y. So what we will do, you will take other information paragraph from here and place it after basis for opinion. Right? That's how you change its placement. Then comes other matter paragraph. What all is there in other matter paragraph? Things other than financial statements. For example, previous year's financial statements were not audited. So you might try to add this other matter paragraph if you want, right? So these are the paragraphs that we add. Then there is another paragraph which is MURGC paragraph. What is MURGC? You need to understand going concern for that. So what happens is in going concern, please pay attention on the board. What happens in going concern is that there are two things. One is that you are no more a going concern. Another is that there is a uncertainty regarding going concern. Now, guys, that means the client is no more a going concern. What is the accounting treatment? The accounting treatment is we should prepare our accounts as per breakup value basis, and we should give a disclosure which is fundamental to users' understanding that we have prepared our financial statements on breakup value basis. If the client has correctly accounted for it, then what you do is you include an NURGC paragraph. For example, you just simply, it's more like emphasis. You're just emphasizing that please check that please check this MURGC, or please check this information out, this disclosure note out, right? Then, okay, wait a second. Second situation is if the client has not correctly done it, if he has done it incorrectly, then what do you do? Come on, tell me. How do you do it? If the client has not correctly used breakup value basis and has actually, you know, the client has incorrectly accounted for it, what do you do? Very good. So if it is correctly done, MURGC paragraph. If it is incorrectly done, that means it's a material and a pervasive misstatement which gives rise to adverse audit. Now comes uncertainty. For example, there is a negative cash balance. Our current ratio is very disappointing. So there is an uncertainty regarding going concern. So if there is an uncertainty, the correct accounting treatment is that you disclose it. Okay. If you have correctly disclosed it, what you will do is you will give a positive paragraph, which is NURGC, where you will draw the user's attention to this disclosure. If you have not correctly done this, this will give a qualified opinion because this is not an adverse misstatement. This is a material misstatement. So you will give a qualified audit, right? So this is what you do for MURGC. So now you understand. I ask you this question to check whether you understood this or not. Is MURGC a positive paragraph or a negative paragraph? Is MURGC a positive paragraph or a negative paragraph? Yes. So MURGC is a positive paragraph. That's correct. Okay. Now, guys, if the going concern, MURGC is a paragraph whose name is material uncertainty regarding going concern. If our going concern was not true, okay, and we've correctly accounted for it, then it should not go into MURGC, rather it should go into emphasis of matter paragraph. Because the name of the MURGC is material uncertainty regarding going concern. So you can't take the going concern assumption which went wrong to MURGC because we are just talking about uncertainty. So only this uncertainty thing which was correctly disclosed will go into MURGC. Otherwise, it will be a qualified opinion. And if the going concern was correctly disclosed and accounted for, it will go into EOL, right? And yes, MURGC is a positive paragraph. Okay, good. Let's move on. So these are the paragraphs that we include. And where do you include these paragraphs? See, emphasis of matter paragraph comes after camp. So name of your friends become Tao, Kiora. So this is emphasis of matter. This is other matter paragraph, other information paragraph. MURGC comes here after basis for opinion. So this is the placement of your various paragraphs. And whenever you add a paragraph, your report is modified. Your audit report is modified, right? So this is what we do in our review and reporting. We've considered the placements. We've considered what exactly goes into the audit report. Okay. Now let us come into certain other assignments. Okay. Let us talk about other assignments. Fine. So one other assignment which I find very important and which is like coming from a very like different from others. If I talk about due diligence, simple. Due diligence is when you want to buy a new client, you perform acceptance procedures on that, and you find whether what they've reported is correct or not. So you perform procedures accordingly. Same for cash flow forecast. So everything that you do in audit, just reduce its intensity, you do in cash flow forecast. Like you do check assumptions, you do check whether the money is going to come in or not. Procedures and everything is same. But one thing which is very different is forensic investigation. So I will revise that with you. Forensic investigation. So first question is, what are the procedures to accept forensic investigation? As an auditor, should you accept a forensic investigation assignment? See, you should first see what are you asked for. Are you asked for to act as an expert witness? So what's your use of getting into this fraud investigation? Do you have the experience and the knowledge? That's very important to know. If you would not have it, then there's no point. Then who is the user of the report that you're going to prepare? After a forensic investigation, you're going to tell that who is the preparator of fraud, what was the fraud, quantification of loss. So who is the user? Is the user the court of law? So you should consider, are you ready to bear those legal proceedings? Then do you have apt human resources? Now you have people who've done ACCA and who've worked in financial statements all this time, and suddenly you ask them to act as CIT, CBI. Is this possible for them? So do you have such human resources which have these, do you have such people who have these knowledge, training, and experience? Then only you should act or accept this forensic investigation. Then what is the risk profile? The client that you're accepting, what is the risk profile of that client? Are they involved in frauds like money laundering, which are criminal offenses? So where are you getting into? And what should be your fees? These are the factors that you should consider before you accept a forensic investigation. Now, these were a little different from due diligence, audit, from cash flow forecast. For others, they all are same. Client acceptance procedures for due diligence is same as audit. For cash flow forecast, the Client acceptance is same as audit. And for audit, you all know what is client acceptance. Check the ethical issues, check the fees, check whether do the KYC of your client and all that things. So you all know what are the acceptance procedures, right? Now, what is the work to be done in the forensic investigation? What work is done in forensic investigation? See, as an auditor or forensic investigator, you are supposed to ascertain the nature plus the circumstances of fraud. Okay? So you're supposed to ascertain the nature and the circumstances of fraud. You are supposed to collect sufficient and appropriate audit evidence to identify the preparator of fraud. Like, who is the preparator of fraud? You should work on that. You should conduct some procedures on that. Then why was the fraud, why was the person being able to, get that fraud into reality? Because maybe there is some deficiency in internal control. So you have to identify that. Then you're supposed to quantify the loss which has happened. Then you have to start applying skepticism. And finally, you are supposed to report this particular fraud. You have to prepare a report where you act as an expert witness, where you say who was the preparator of fraud, how did you find it, why this fraud was, taken place, why this fraud has taken place, what was the circumstance of fraud, what was the intention behind the fraud, why, this was allowed because maybe there's a deficiency, what loss has happened due to this, and you finally report it and prepare a report, which is known as forensic investigation. So this whole work that has to be done, whatever things you have to do will be variant. They will vary from case to case. So for example, in a case study, it is given that there was a fraud on inventories. Maybe, there was a collusion between two people. The person who was counting the inventory and the warehouse manager, they both were same. So there was a collusion, or they were related. There was a collusion between them, which is why the warehouse manager was able to misappropriate the inventory, or maybe the warehouse manager was able to misallocate the inventory. Maybe he was able to steal the inventory from the warehouse. So this is going to vary from case to case. So you will perform certain procedures that, how can I figure out who has committed the fraud? I can investigate, I can inquire from the warehouse manager. I can check the CCTV footages. I can check the attendance sheets the day when the inventory was stolen, whether the warehouse manager was present or not. I can check the good dispatch notes and how they record the inventory. I can perform a manual check of it. So all these things are the works that you can perform in the forensic investigation. That's it. So these are the things that you have to take into account in other assignment. This was one of the most important other assignment that I've discussed with you. Rest due diligence, cash flow forecast is simple and quite same to audit. Now let us discuss our two most important technical articles. Okay. That is something that I promised to all my students as well, that we will discuss it. And yes, okay, ISQM 2, we will discuss that also. If I've said you that we will discuss it in grant revision, I'll surely take it up. Don't worry. Let us first consider our technical articles. First technical article is on big data. What is big data? Big data is scattered. Okay. So what is big data? Scattered or unstructured data. What does that mean? Today, if you serve anything on Google, that is getting stored somewhere. So yesterday, I Googled some restaurant near me, and suddenly I started getting ads from various restaurants. So, and I got a notification from Swiggy also, are you hungry and all that. So it was like, whatever I serve, it is going somewhere. And these people, they're using this data to actually, target their ads. Okay. So what is big data? It is the scattered, unstructured data. So anyone who searches anything, it is getting stored somewhere. And if the whole population is surfing on Google, that data is getting stored. So we can say that data is big data, right? Now, how is this big data helping the process of audit? What are the advantages and disadvantages of big data is a question that you can get for around 4 marks. So, first of all, this is leading to, or this is helping us in computer assisted audit techniques. So, what are computer assisted audit techniques? Audit is not just like financial reporting. We were used to do manual financial reporting. We were making invoices by hand. We were posting them on manual journals, making trial balance. All that was manual. But now we are making it not just manual, but we are doing it via QuickBooks, Tally, all that is happening, which is digitalized. Similarly, the auditors are also now moving towards digital tactics. They're using sampling techniques which are done by like softwares. Auditors also have their softwares. They are drawing analysis. For example, if you want to perform, you all know what analytical procedures are, right? So why to do analytical procedures manually? Let that be done by some software. They will draw graphs for you, they will draw pie charts for you, they will give you the percentages. This was the profit, this is the percentage, this was the movement, this is absurd, this movement is contradictory, this movement is not right. So all these things are given by the software. So this computer assisted audit technique has made the process of audit more sophisticated, and this is being possible because of big data. So when you structure the big data, the computer assisted audit technique helps you in structuring the big data and gives you an analysis which further helps you in the process of audit for the identification of risky areas and how much work should you perform in certain areas. Right? So what next we have is big data also helps in reduction of ROM. Reduction of ROMM. So basically, what we are doing is we are reducing our risk of material misstatement because we are using big data, we are using computer assisted audit techniques, we are making better conclusions, right? This is based upon AI, so it saves time, it reduces human error, right? And it gives us better conclusions. And all in all, this reduces our detection risk. So this is something which are the advantages of big data. Then if I consider what are the disadvantages of big data, the disadvantage is that because you have data of your client, which you're using for the process of audit, this might lead to leakage of data, right? And data can be manipulated. Like, for example, you can manipulate a software to draw certain conclusions. And especially if you do not have the knowledge of AI, you won't even be able to identify that manipulation, right? Then it's a costly thing to do because you need certain people who have the information or who have the knowledge and training of using such softwares. Plus, you might end up doing some non-compliance with laws and regulation. You might end up, for example, you were not supposed to use some data. For example, whenever you put up or you go to a website, they sometimes ask you to fill a form. So all your data, that is your mobile phone, your number, your emails, your address, it goes to certain company. And now that company can misuse it. Okay. So your data can be leaked in public. So that is how some frauds are actually happening. So that leads to NOCLAR, right? That is a non-compliance with laws and regulation. Unknowingly, you might leak out the data of your customers. If we talk about companies like Unilever, we talk about companies like Apple, we talk about companies like Microsoft. They have data of almost the whole world. They and if their data gets leaked, just imagine the effect, the butterfly effect, which will happen. So this is like the companies are liable to keep that information, sensitive information, private, but they might end up not keeping it private, intentionally or unintentionally, which is a disadvantage of big data. So this is a small 4 to 5 marker, which you might, I'm not saying 100%, you might get. So I just discussed it. Next comes sustainable reporting. Okay. So here we are discussing about an exposure draft, which is basically International Standard on Auditing 5000. It's an exposure draft. It's not yet finalized. So you all know what sustainable reporting is, where we basically, what is sustainability? Sustainability is we use the, we use the resources in such an optimum way that not just our current generations, but our future generations are also able to utilize them. That is sustainability. Right. So what is the objective of this exposure draft? What is the objective of this exposure draft? The objective is to check if the sustainable report is true and fair or not. You know what is sustainable report? Do you know what is sustainable report? Anyone who knows what is sustainable report? You all have done this in SBR. I hope you all have done this in SBR, sustainable reporting. If you have not done this, let me just put up a link here. After the session, you can watch this to get hands-on experience on IFRS S1 and IFRS S2. Just for the sake of your understanding, I'm pasting a link here about sustainable reporting. This is something you all must have done in your SBR. There's no way that you wouldn't have done this because this is something which almost everyone has done. Where we talk about 6 types of capital, we talk about how we, just not in financial statements in annual report, we just don't actually report the numbers, but we also report certain things like how our human resources are, how our manufactured capital, financial capital, how are we contributing to the society. Those are the things that we report, right? So now, if that is being reported by the accountant, now the auditor's job is to check whether the sustainable report which is prepared is true and fair or not. So I've pasted a link here. Just watch this small video, which is from SBR. It will just help you to understand what are the standards regarding sustainable reporting in IFRS. Now, as in audit, you're supposed to check whether the sustainable report is true and fair or not. So here you give assurance, right? You give assurance here. What kind of assurance can you give in this case? You can either give reasonable assurance and you can give limited assurance. That depends upon question to question, requirement to requirement. And please understand that sustainable reporting in itself is a new concept. So auditors by far are not accustomed with sustainable reporting. And what is sustainable reporting? Let's suppose the company says, I have planted 100 trees. As an auditor, it's very difficult to see whether they've actually planted 100 trees or not. You can inquire, you can investigate, but how, I would say, wastage of resource is this that you will actually go and see and count whether the 100 trees are planted or not. Because nobody as of now in the shareholders are basing their financial decision on the basis of such factors. They might consider them as secondary factors, but these are not primary factors. So we have to strike a balance, okay? When someone says 10% of our income is donated, Of course, we can check it. We will do our efforts to check it. But again, it's difficult because they've recorded the revenue. Whether their 10% they've recorded as an expense is going into charity or not, whether that's real or not, is something which is difficult to assert. Right? So what is the objective of this standard is to check whether the sustainable report is true and fair. To give report, to give assurance is our objective. Now, in this, we first have to see how can we base our materiality. So in this exposure draft, they have explained about materiality, right? Okay. In this exposure draft, we are given about bifurcated materiality. A concept of bifurcated materiality. What is bifurcated materiality? We bifurcate it between nature and amount. Okay, so what is the amount of the thing that we are checking in the sustainable report and what is the nature? Just like materiality is by size and nature, same way here also materiality is by size and nature. Now they say materiality is dependent upon two things. So there is a double materiality. That how is it material to the organization, the particular claim that they have? So how is it material to the organization internally? And then how it is material to the organization outside the organization. So if you say that the charity was made, how is that charity material to internal organization and how is it material to outside organization? That's what you consider. Then you also make your plannings and just like your audit, normal audit, you do your planning. Okay. You find the risky areas in the audit report. Just like you do in audit, you do it in sustainable report also. What are the risky things? Right? What are the internal controls which the entity has in place to make sure that what they're saying is right? Then you even check their evidence. You even check evidences. What are these evidences? See, just like in audit, you collect sufficient and appropriate audit evidence. Here also, you're supposed to collect evidence to state that yes, whatever they're saying is right. Now, evidence in this case is very difficult to get. How can you get an evidence of growing trees? So this is going to be a very subjective area, which will be based upon judgment, which is going to be, it is going to be very difficult. It is difficult to obtain sufficient and appropriate audit evidence. See, when we talk about audit evidence, we have numbers in hand. We have accuracy which can be checked. In here, we don't have accuracy. These are all qualitative factors. These are all qualitative things that this is how we are contributing to the society. So it's very difficult to get audit evidence regarding the same. Right? So what we do is we either give the limited assurance or reasonable assurance, right? And limited assurances, which starts from nothing that we have audited is wrong here. So that's limited assurance. And reasonable assurances that like you give in normal audit, right? I hope you all know the difference between reasonable and limited, right? Now, what is happening is auditor must understand that these days we are all working towards green reporting. Okay, we are working towards green washing. Everyone wants to wash their financial statements green. It's not whitewashing, it's greenwashing. Everyone wants to show that they are very, tilted and twisted towards environment. They are very worried about environment. They're very worried about society. Every company wants to do this. So what is happening is auditors should understand that the client, that the company might actually might have been lying about all of this. So the auditor must understand that the world at large, there is a risk of fraud in this because the world at large is moving towards greenwashing. So there is a risk of fraud. So the things are subject to a lot of manipulation. So auditor's job become way more difficult in this situation. right? And it is difficult for anyone to question the auditor as well. Like, how whether person will set the liability of the auditor, because you can't ask an auditor, you did check the number of trees they planted. Not possible, right? So it's difficult for everyone to question the auditor as well, right? So these are the things that you should know in your sustainable reporting technical article. That you can just read this technical article. It's there on ACCA's website. If you want, you can just go and have a reading of it. You might get a 5 marker on this as well, that what is there in the sustainable reporting auditing strategy, because this is a very new concept. So yes, you might be asked a question on it. If you can just get 10 minutes out of your study schedule and read the technical article, that would help you a lot. I won't say the same thing about big data, but I will say this by sustainable. What sustainable, right? So I hope we all are clear till here. Yes, we all are clear till here. Okay. Now, guys, I will be making a mock debrief, which is the December pre-mock debrief. Okay. So in our December pre-mock debrief, if you want, you can attend it by ACCA itself. If you don't want to attend that one, you want a detailed one, I'll be making one where I will read the question in front of you and solve the question in front of you. It will be available tomorrow. Okay, this is available tomorrow at 6 p.m. on the YouTube channel. It will be available. And in the same video, I will brief you about ISQM2. I wanted to brief it today, but we are running short of time. It's already 3 hours 30 minutes. This session has started. So let us keep that small concept for our mock debrief. Before I start the answer writing, I shortly discuss with you the ISQM, right? Okay, fine. So that's it. So I will just put this one up tomorrow at 6 p.m. Tomorrow it's 29th, I guess. So 29th of November, we will have our pre-mock meeting. Okay. So that's it, guys. And I hope this session was helpful to you. I tried my level best so that I can cover majority of the areas, but still there are certain core topics which are left. But still we have covered majority of the areas. So you should do those certain topics, like you should know the responsibilities of the auditor regarding review, like, events after reporting period. You should know the how to rely on internal auditor, how to rely on component auditor, what is transnational audit, what is joint audit. So these are certain terms that you should be aware, right? So if you have actually enjoyed the session, do let me know in the chat box, and make sure you give a like on the video and share this with all your friends who are preparing for AAA. So it's quite late here in India. It's 9:30 already. And let's just end this session for now. And let's just watch the December pre-mock debrief tomorrow. It will be a recorded class, okay? It will not be live. It will be a recorded one. December pre-mock debrief on your same YouTube channel by the name of Tashwita Gupta. You'll find it here. And if you're preparing for your March attempt 2025, you know the run. You go to TG Prof's website. And if you want, you can enroll yourself into the course called March 2025. This time we'll be having a lot of live sessions, unlike December. So I had few events scheduled for December, which is why we had less live sessions in March, which I informed prior only before we began. But for March, we'll be back to the basics. We will have our live sessions for Super 20 and everything as per we used to. That's it. And goodbye, take care, good night, see you all, and all the very best. Please focus on your Super 20 questions, focus on your technique, how you write your answers, focus on how you make your answers for audit risk, for your ROMM, for your business risk, for your procedures, evidence, reporting, matters to consider, ethical issues, quality management, all of that. It's very, very important that you, okay? Thank you. I hope all were helped. Goodbye. Take care. May you all be blessed and may you all pass with flying colors. Bye, everyone. Good night. Bye.